Hello everyone. Good morning to all. Today we are joining for the online preparatory course for this certificate course on sustainability and BRSR. We are introducing you with the new background material on for the certificate course. We are here with us Dr. Chindu Chandran. She will give you a brief about the course and what all changes in the exam pattern and what all changes we have been made in the background material and in the course content. Over to you, Chindu.
Thank you so much, Shweta ma'am, to introducing me. A very good morning to all. I welcome you for the today's online preparatory batch for the certificate course on sustainability and BRSR examination. So agenda for today is we'll be going through understanding what the examination structure is, overview of the key topics and what are the new concepts that we have introduced, highlighting the recent syllabus changes through the revised background material. We will be discussing that, some of the sample questions, as well as we have the question answer session for your clarifications. So coming with the exam structure, so we have 60 MCQ questions, which is of 1.5 marks each, thus totaling the 90 marks. Other than MCQ questions, we will be having one case study, and each case study will have 5 MCQ. Each question will be of 2 marks. So thus it will be 10, thus totaling your exam structure of 100 marks. Exam will be totally held online. It's no physical examination, and it will be done through the DLH portal. The maximum exam duration is 120 minutes, whereas the minimum exam duration that you have to be spent is 60 minutes. There will be no negative marking. Now, if we talk about the passing requirement, the minimum percentage that you have to get qualified for the certificate course examination is the 50% marks. Now, if we talk about from where you have to prepare yourself, you have to go through the PPTs and the revised background material that we'll be sharing with you. Other than that, for the batches who were from batch number 1 to 19, we will be providing you with the latest PPTs as well as the recordings through which you can in detail understand the revised structure and the course curriculum as well as the topics and the concepts. Now, talking about the exam requirements, only those candidates whose attendance requirement during the course are complete are eligible for the examination. That means you should have 80% of the attendance. Now, if you want to confirm for the examination, you have to fill the Google form, which has been already shared. And from that, you have to choose your respective exam dates. That is either the 13th April 2024, 20th April 2024, and the 28th April 2024. You have to choose any one date. And the last date to send your confirmations is 8th April 2024. Now, once you will register yourself through this Google form, we will send you an email for your face registration and face authentication process to appear for the online examination.
Please be on time and do the face registration.
Yeah, and please, you have to make sure that as soon as we will send you the email for the face registration and face authentication, this process you have to do within 1 or 2 days of the time so that it can be easy for you to give your exams respective day on the DLH. Now, as I told you, examination is online. So this will be conducted through the Digital Learning Hub platform. And the member have to either use the PC or the laptop to authenticate his or her face. Please make sure you can't use the mobile phones like the phones and the tablet. It's not allowed. So once your face registration and face authentication will be successful, the participants can give their exams on the respective day from the DLH. Now coming to what is the revised version 2024 talks about. So now we have total of 9 modules. So the first module deals with introduction and the importance of sustainability, in which the key topics are sustainability in business, United Nations Sustainable Development Goal 2030, the need for sustainability reporting, and the national guidance on the responsible business conduct. Now, as we compare to the revised version 2021, as such, there is nothing changed by the content, but what we have done is we have made it more crisper and easy for the understanding and the readability of the user. Now, coming to the module 2, which is overview and guidance on BRSR disclosures. In this, we'll be discussing about the evolution of ESG reporting in India and the BRR, the need for shift from the BRR to the BRSR, limitations of the BRR, what are the key highlights of the current format of the BRSR, as well as to understand what is the difference between the BRSR from the earlier form of the BRR. Then overview of the BRSR comprehensive light and the core reporting, disclosure requirements under business responsibility and the sustainability reporting. Now, if we see in the earlier background material, the BRSR updated reporting framework was not discussed, and the new SEBI guidelines were also not there, like the BRSR code. So the revised version includes all these changes. Now, coming to module 3, which is deep dive in the governance issue and the risk management and the SRM. Now, in this, we will be discussing about the ESG transforming the corporate landscape, the key trends and the focus areas in the transformation of ESG reporting expectations, the board of directors and the BRSR reporting, the specific role of the board in the BRSR, and how the BRSR aligns with the broader corporate governance framework, what is the ethics and the code of good corporate behavior, ESG governance, and the way forward. Now, in this also, it's somehow the same content, only we have just overall the outline and the content is reframed so that it will be easy for you to understand now. Now, coming to the module 4, which talks about the best practices, ESG data management and SRMM. Now, in this, what we have got major changes done. Earlier, the SRMM version 1 was introduced, was explained. But in the current version, SRMM version 2 is explained, which is an updated version. Other than that, for your easiness, what we have done is we have given the cross links of the illustrative BRSR reports for the financial year of some of the companies from 2022 to 23. Now, coming to the module 5, which talks about the BRSR vis-a-vis global framework, in which we'll be discussing about what are the global trends in the corporate sustainability reporting, what are the global emerging trends in sustainability reporting, GRI, SASB, about IIRC and TCFD. Now, there is a lot of being changes done in the GRI framework as well as the TCFD after the 2021. So such revised changes have been incorporated in the revised version of the 2024. Now, coming to the materiality assessment, it will be discussing about what is materiality in the ESG context, the process and methodologies of the ESG materiality assessment, mapping and presenting how to present a materiality assessment, integration of materiality into business strategy, and the most important, what is double materiality. So earlier, the double materiality concept was not explained in your earlier version, but in the revised edition, it has been explained. Now, coming to the module 7, assurance aspect in the Indian context. So what is assurance as per the sustainability reporting? What is voluntary and the mandatory kind of the assurance in Indian context? Applicable standard for the sustainability assurance. What are the different type of the assurance? Approach to the assurance engagements and ethics and independence requirement. So according to this, in the revised version, we have included what is the BRSR code and how the assurance has to be done for the BRSR code. The FAQs, all this has been added. Now, coming to the module 8, social stock exchange and the social audit standard. Now, it discusses about the social stock exchange eligibility, registration, financing, etc., and the social audit standard. There is only some minor changes that we have introduced because there are some SEBI regulations which came up, which have changed some of the limits and some of the values. So that is being added in the revised version. Now, module 9 is kind of a different module and the new module that we have introduced, which discusses about what is carbon trading, carbon offset, what are the green bonds and the blue bonds. So this is separately being added into the module 9.
As we have received one question that what is the weightage of each module? There is no specific weightage for the exam. The questions will include all the modules and all the questions will be covered according to the modules. So though there is no specific weightage given to each module.
We will discuss and just go through the background material of what the sustainability and business responsibility and sustainability revised edition 2024. Now, our purpose here is to just make you go through what is our revised background material talks about, a brief about the key concepts and for detailed things, as I told you in the earlier description, that will be sharing you the latest recordings and the PPTs for your consideration, which discusses about each of the topics in much detail. So coming to the revised edition. So this is our module 1, which is introduction and importance of sustainability. So what we have done is before the introduction of each module, we have given just what exactly the module talks about. So we have added the key elements in this. And then exactly after reading the module, like what will be your knowledge enhancement after the reading of the module 1. So coming with the first, what sustainability in business talk about. So when we talk about what exactly the sustainability is, so in 1987, the United Nations Brundtland Commission actually gave a definition about the sustainability, which means that we have to meet the needs of the present without compromising the ability of the future generation so that they can meet their own needs. So whenever we talk about the sustainable development, it's actually an integrated approach. We can't only think about the economic development. We have to take into consideration the 3 pillars basically. So we have to go through the social aspect as well and the environmental concerns as well. So this is the normal about what sustainability is. But when we talk about what sustainability in business, so this is basically when a company's strategy or you talk about their actions are in such a way that they will reduce the adverse environmental and the social impact from their business operations in a particular market. That is basically the sustainability in business. Now, when we talk about their actions, so sometimes these days we have heard that most of the brands just add the labels like green, being natural. So this is most of happening, and this concept is we have called like greenwashing. So to solve this, if we see the benefits, if a company is incorporating these sustainable practices, it's actually result in the real benefits if they do in the real practice. So for example, it will result into the foster the customer loyalty. It will attract and retain the top talent. It will also secure your funding, mitigate the risk. It will also help you to open to the new market, drive the innovation, and help the communities as well. So ultimately, this whole process will redefine what the business is existing and will turn them just making money from actually taking care of the earth and its people. So coming to the next, what are the basic global topics that is very much in talking about when we talk about the sustainable development? So if we talk about the international agreement, the major international agreement, which was a landmark agreement, you can say that it was the Paris Agreement on Climate Change, as well as the United Nations Sustainable Development Goal that we talk about, the SDGs. Now, these all international agreements is actually targeting about addressing the climate change, reducing the poverty and promoting equality and protecting ecosystem, not at the regional or national level, but it is actually giving us a framework for the global action. Now, when we talk about the corporate sustainability, now why is it getting importance is because now the business models are also recognizing themselves to being a part of being good towards the environment, how they will be responsible, being social, as well as what is the good corporate governance that we talk about. Now, when we talk about the social equity, the main emphasis go towards how they can reduce the poverty, how they can go towards better education and the healthcare, how they can empower the marginalized communities, etc. Now, renewable energy is also very demand. If you see in India, also many of the policies are helping us to go towards the solar, wind and the hydropower projects. We are getting rebates as well for that. Now, when we talk about the climate finance and the sustainable investment, now, other than that, when we talk about the investment decisions, it's very important to integrate the financial structure with the ESG factor. Now, when we talk about the ESG factors, basically the environmental, social, and the governance factors. Now, in this, we will, in the last module, that is module 9, we'll be discussing about what are the various green finance instruments that we have. For example, the green bonds, the carbon credit, and as well as the blue bonds that we have. Now, coming to the local action and the grassroots movement, it's very important that we have to take into consideration the local governments, and we have to go towards the community-based initiative where we'll be involving the community with us. So we have to make sure that if a company is going for the CSR projects, we need to involve the community who will be actually getting the direct benefits. Now, coming to the nature-based solutions. So basically, these are those solutions where we'll be using the services of an ecosystem so that we can address the environmental challenges. Like for a simple example, we use carbon sequestration. So if we are planting more of the trees, this will help us to sequester the carbon dioxide that the companies or the maybe any CO2 has been released into the atmosphere. So that we talk about as a carbon sequestration. So these are some of the nature-based solutions that we can incorporate. Similarly, like green infrastructure, we can create buildings in such a way that this will be more resilient and you can say more benefit for the environment. Now, coming to the regenerative agriculture. Now, this regenerative agriculture doesn't mean that it's only those kind of the farming practices where, for example, we are not using the pesticides or something. Now, there are many other techniques which are into the market, like a concept like agroforestry, like with the forest itself, we can do the agriculture. So similarly, there are other things. Now, coming to the circular design and manufacturing. Now, this approach basically aims how we can minimize the waste, keeping in mind that we can maximize the resource efficiency as well. Now, here we will design the products in such a way will be more durable, we can reuse it, and definitely we can recycle it. Now, coming to the smart cities and the sustainable urbanization, as we are going towards the development, definitely more cities and we are getting more urbanized, but we have to go urbanization in such a way that it should be more sustainable and the resources should be utilized in a very government way. As we said, what sustainable definition is, that we have to leave our resources for the future generations as well. Now, coming to the digitalization for the sustainability. Now, when we talk about the digital technologies, it means using the AI, that is the artificial intelligence, as well as the blockchain. Now, why is it important? Because it will help us to optimize how we can do our resource management. Even we can monitor what are the environmental performances that we can have. For example, this will help, for example, if you have placed a solar panel, I can know how much of the energy I'm generating through the solar and how much my dependency is decreasing from the non-renewable sources of the energy. Now, coming to the United Nations Sustainable Development Goals 2030. So it's very important how this journey came upon, what is the evolution that resulted into the 17 Sustainable Development Goals. So the evolution deals with, so in 2000, there was a New York summit in which the Millennium Declaration was made. And in this declaration, there were some 8 goals, which were known as the Millennium Development Goals. In 2002, there was an Earth Summit in Johannesburg. And there, the Johannesburg Declaration on Sustainable Development, and there was a plan of implementation which was adopted. Basically, the main aim and the commitment was to eradicate the poverty and how the emphasis can be given more on the environment by keeping the multilateral partnership. Now, in 2012, the Earth Summit was again held in Rio de Janeiro. And here we adopted the future we want. So basically, this was a process where actually the formulation of the Sustainable Development Goal happened. And the base was 8 MDGs, but finally we developed the 17 SDG goals. So a 30-member open working group was set up in 2013. And finally, these 17 SDG goals, after a lot of consultation discussions, were finalized. So 2015 was that landmark year where the Paris Agreement on Climate Change was also there and the Sustainable Development Goals were adopted. So when we talk about the Sustainable Development Goals, it's been based on 5 pillars, which is also known as 5 Ps, which is people, planet, prosperity, peace, and the partnership. Now, if we talk about these 5 pillars, all 17 goals are aligned to these broad pillars. We can't differentiate them according to the pillars, but yes, there is some interlinking. So if we see the linkage, when we talk about the goal 1 to 5, it basically focuses with the people. If we talk about the goal number 6 to 15, it focuses on planet and prosperity. But if we talk about the goal 16, it is linked with the peace. But if we talk about the partnership, that is related to the goal 17. But again, we can't say that the goal 1 to 5 is not with partnership or peace. All these goals and even all these pillars are interlinked to each other. So if we see this global indicator framework for the 2030 SDG goals, according to all these SDGs, we have total of 169 targets. And for the targets, we have the 247 indicators, which are listed in the global indicator framework. But if we see, only 231 indicators are the unique one, and rest indicators are mixing with the other targets as well. Now, coming to the linkage of the pillar with the respective SDGs. So if we see the people pillar, the goals 1, which is associated, is the no poverty. Goal 2 is zero hunger. Goal 3 is good health and well-being. Goal 4 is the quality education. And goal 5 talks about the gender equality. Now, if we see about the next piece, which is planet and prosperity, the SDGs to which we are linked is the goal 6, that is clean water and the sanitation. Goal 7 is affordable and the clean energy. Goal 8 is decent work and the economic growth. Goal 9 is industry, innovation, and infrastructure. Goal 10 is about the reduced inequality. Goal 11 talks about the sustainable cities and communities. Goal 12 is about the responsible consumption and the production. Goal 13 talks about climate action. Goal 14 is life below the water. Goal 15 is life on land. Now, if we come to the next pillar, which is peace, the goal here which talks about is the peace and the justice strong institutions. And the last pillar, which we have partnership, the goal related to it is partnership to achieve the goal. Now, each SDG goal have some targets. And as we all know, the 2030 is the year where we have talked about that we have to achieve these particular targets. So goal 1, which talks about the no poverty, is actually the goal where we want to eradicate extreme poverty for all the people everywhere by around 2030. And the column describes about what are the different targets that we have to achieve. Similarly, goal 2 is a zero hunger, which talks about we have to create a world which is free of the hunger. And there are some specific targets that we have to again achieve by the 2030 goal. Now, similarly, when we talk about the goal 3, which is good health and well-being, so it makes in making improvement towards the people health in the recent years, giving good hospital things, maybe healthcare sector, and all, it has to be improved. Vaccinations have to be done. It also talks about the commitment to end the epidemics like the AIDS, tuberculosis, malaria, and other communicable diseases by 2030. Similarly, when we talk about the next goal, that is goal 4, which is quality education. Now, when we have to make the sustainable development goals to be achieved, education acts as a very key pillar, because when people will get the quality education, then only we can break them from the cycle of the poverty. It's very important that we have to, even it also help in reducing the inequalities and even to reach a gender equality status as well. So giving education and making it accessible for the people, it's also very important. Now, coming to the next goal, it talks about the gender equality. It's not only a fundamental human right, but it also is a very important foundation to achieve a sustainable world as well. Then coming to the clean water and the sanitation. Now, it makes sure that we have to give access to the safe water, sanitation and hygiene, which is a basic human need for our health as well as the well-being as well. So again, according to the 2030, there are some specific targets that which we have to be achieved under goal 5. Similarly, we have goal 7, affordable and the clean energy. Now, in this, this talks about how we can make sure that we can ensure the access to the clean and affordable energy, basically for the development of the agriculture, the business sector, communication, education, healthcare, as well as the transportation. In this, we are expanding the infrastructure as well as upgrading the technology so that we can provide clean energy as well. In all the developing countries is a crucial goal that we can encourage growth and help the environment. Coming to goal 8, which is decent work and the economic growth, it talks about promoting inclusive and the sustainable economic growth, employment, as well as a decent work for all. The next goal is about industry innovation and the infrastructure. This seeks to build a resilient infrastructure, promote the sustainable industrialization, and foster the innovation as well. Now, coming to the reduced inequalities, it talks about, now, whenever if there is an inequality, it will threaten our long-term social and the economic development. It will also harm the poverty reduction, and it will destroy the people's sense of fulfillment and the self-worth. So we have to make sure that we have to reduce this inequality, maybe in terms of gender as well, maybe in terms of accessibility of the resources. So we have to make sure that it has to be reduced. So again, we have some specific targets. Coming to the sustainable cities and communities. Now, goal 11 is basically about making the cities and human settlements inclusive, safe, resilient, and sustainable as well. Now, we know that urbanization is increasing at an alarming rate. And with this alarming rate, we are getting some gift like urban sprawl, the air pollution, limited open public space area. So that's what we have to make the cities as well as sustainable. Coming to goal 12, which talks about the responsible consumption and the production. So this goal deals about ensuring sustainable consumption and the production pattern, which is a key to the sustain the livelihood of the current as well as the future generation, which was also the definition of the real sustainable development. Now coming to the goal 13, which is climate action. Now climate change is a phenomena where we are seeing that there is an alarming change in the temperatures across the global one. And here we are limiting the global warming about 1.5 degrees Celsius above the pre-industrial level. And we are trying to get the emissions, which is already decreasing. And we have to cut almost half by the 2030. So this is the target. And there are many other targets according to the 2030. Now the goal 14, which talks about the life below water. Now, goal 14 is about conserving and sustainably using the ocean, seas, and the marine resources. Now, why is it important? Because the water also act as the carbon sequestration thing. There is many life form which will convert the CO2 into the other form of the carbonates, which is good for the environment. So this is very important that how we can do that. And for it, it is very important that we have to reduce the marine pollution as well. Now, coming to the next goal, which is goal 15. It talks about the life on land. So here we'll be dealing with, we have to conserve our forest, we have to combat the desertification, and we have to stop the land degradation as well as the biodiversity loss. Then coming to the next goal, which is 16, peace, justice, and the strong institution. So here it is more about promoting the peaceful and the inclusive society, providing access to justice for all, and building effective, accountable, and inclusive institutions at all the levels. Coming to the last goal, which is goal 17, partnership for the goal. Now this can't be done if you think, so we have to come all together, all the nations and all the countries have to come together so that we can achieve it. So multilateral partnerships are also very important. Again, for this also, we have a lot of targets that we have to be achieved. Now, if we can see, this targets is being divided into related to the finance, and then we have for the technology, and then we have for the capacity building, for the trade. And if there are some systemic issues, we have for the policy and the institutional coherence, multi-stakeholder partnerships, data monitoring, and the accountability. Now the question comes, why there is a need of sustainability reporting. Now, before, we need to understand what actually sustainability reporting is. So if we see the definition of Global Reporting Initiative, GRI, which is also the first international sustainability reporting framework that they have given. If we see, they define it as an overview of a company's economic, environment, and the social impact, which is caused by their everyday activities. Now, basically, if you see this reporting, it's basically based on our ESG pillars only, which is environment, social, and the governance. Now, the question comes, why there was a need for the sustainability reporting? Now, because of the sustainability reporting, the organization cannot make the false claim, because now they have to provide the credible and the measurable information to the world in the form of what they are actually doing it. And we can even cross-check, because those reports are basically available on the public domain. So we can cross-question them as well. Now, the Organization for the Economic Cooperation and the Development, they suggested that the companies who are actually doing the sustainable performance on ESG criteria and communication, they have it is visualized that they enjoy the better financial performance as well. Now, when we talk about the ESG, these three pillars are the environment, social, and the governance, on which basically the parameters the company need to tell about what actually they're doing into the system. So there was an organization that was set up in 2021-22, which is International Sustainability Standard Board, under which the International Financial Reporting Standard, IFRS Foundation, was there, whose mandate was to create and development of the sustainability related financial reporting standard so that it can meet the investor need for the sustainability reporting. Now, if we see what is actually the purpose and objective of the sustainability reporting. Now, if we do sustainability reporting, it will help in customer satisfaction and retention. It will always help you to gain a competitive advantage as compared to the others. It provides more accountability. It also helps your employee having a greater satisfaction, and your employees will try to be retention in the same company. Provide specific information instead of greenwashing. As I told, you can just normally not say we are eco-friendly or we are reducing emissions. You have to tell in the numbers that how you are doing it. So providing the specific information will be able to prevent the greenwashing. and you can demonstrate the progress that how you're moving towards the sustainability. Now, coming to the national guidelines on responsible business conduct. So in 2011, Ministry of the Corporate Affairs issued the National Voluntary Guidelines on Social Environment and the Economic Responsibilities of the Business. And in 2019, it was updated, and finally it was released as National Guidelines for Responsible Business Conduct. Now, it was designed to basically assess the businesses in performing above and beyond the requirements of the regulatory compliances. Now, if you see their structure, it basically consists of 2 chapters, and they have an expanded set of annexures. The first chapter basically deals with the introduction. It provides a context and background, what it deals with. The second chapter is actually about the core elements, and in detail, it explains about the 9 principles of the NGBRC. The annexures contain the detailed as well as the practical guidelines, how you can adopt it and how these guidance into operations can be implemented. Now, coming to these 9 principles of the NGBRC, it's very important to know that all these 9 principles are aligned to our 17 Sustainable Development Goals. So this table clearly defines how each principle is aligned to which SDG goals. Now, these below tables, if you see, each principle, it explains what the principle is about and what it deals with. And the other column tells about that if you want to achieve this principle, how it can be achieved. So with this is the basic discussion about the module 1. Now coming to module 2, which gives you the overview about what exactly the BRSR is and what are the disclosures that we need to do in the BRSR. Now coming to how the practice of reporting actually came in India. So it started in 2011 when the National Voluntary Guidelines on Social Environment Economic Responsibility was released by the Ministry of the Corporate Affairs in July 2011. Then business responsibility reporting was basically launched on the basis of these NVGs by the SEBI in 2012. But at that time, it was only applicable to top 100 listed entities on the basis of the market capitalization. Then in 2013, the CSR was introduced under the Section 135 of the Companies Act. And 2015, we know it was the landmark year where the agenda of the sustainable development was adopted. Then in 2015, the business responsibility reporting, earlier it was still 100, but now in 2015, it was applicable for the top 500 listed companies. Then in 2019, the NVGs were replaced by National Guidelines on Responsible Business Conduct. And on the basis of this, 2019, the business responsibility reporting was extended to top 1,000 listed companies. The landmark year for the BRSR was 2021, where the BRR was replaced with the BRSR, where the BRSR was introduced for the ESG reporting structure for the corporate. In this, it was applicable for the top 1,000 listed entities on the stock exchange. Now, the new thing which is being added, which was introduced in 2023, is about the BRSR code. It's nothing, it's actually the subset of a BRSR, which consists of the KPIs, that is the key performance indicators, or the metrics under the ESG attributes. This will be explained in detail, the BRSR code, what are the key KPI indicators, as well as what are the detailed metrics that need to be assessed in the further modules. Now, coming to the reason why we need to shift it from the BRR to BRSR. So in 2012, the ESG reporting requirement was introduced. So there was a joint study that was done by Indian Institute of Corporate Affairs with the United Nations Children Fund. And in this study, it exposed the gaps which was in the BRR framework. And to fill up those gaps, it was made ensure and to have non-financial performance with enhanced transparency, the BRSR reporting framework was introduced. Now, if we see what is the basic difference between the BRR and BRSR, now both were applicable to the top 1,000 listed entities. The disclosures were basically made with the annual report, but in the case of the BRSR, the disclosures were made with respect to the annual report as well as the MCA 21 portal through the XBRL language. In BRR, only quantitative disclosures were there, but in the case of the BRSR, both quantitative as well as the qualitative disclosures being discussed. Now, BRSR have two formats: comprehensive, which is for the top 1,000 ones. The light version can be adapted on the voluntary basis, which are not being abide by the rules of the top 1,000 ones. Now, if you see, BRSR comprehensive is the most detailed version, which is mandatory for the top 1,000 listed companies by the market capitalization. Whereas if we talk about the BRSR light, it offers a simplified approach, which can be a stepping stone for the companies to get familiar with what sustainability reporting is. Whereas the BRSR core is within the BRSR framework, which includes a specific set of essential disclosure within the BRSR framework. This is more with related to the assurance aspect of the sustainability reporting. So we have given a better comparison on the basis of the parameter how BRSR light is differed with the BRSR comprehensive. Now, coming to structure and the format of the BRSR. So basically, it consists of the three sections: Section A, Section B, and the Section C. Now, Section A deals with the general information about the entity. What's its name, what is the contact details, and all those information. Section B deals with the management and the process disclosure. Whereas Section C is the most important one, which deals with the principle-wise performance disclosures. We have the 9 principles. In this, we have 2 sets of indicators: essential indicators as well as the leadership indicators. Now, essential indicators are the mandatory ones that we have to fulfill, whereas the leadership are the voluntary ones. Now, if we see, so when we talk about the BRSR, according to the SEBI, that is a format being given, they have given 2 annexures, Annexure 1 and Annexure 2. The Annexure 1 talks about the real format of the BRSR. Whereas if we talk about the Annexure 2, it gives the detailed guidance that how you have to implement those particular sections of the BRSR report. So what we have done is, in this section, we have incorporated together. So we have first introduced with what BRSR formatting requirement is, and then we have given the guidance of that particular segment in the itself as a part of a notes. So at the one place, we have combined together both the annexures. So if we see, so this is the broad outline that what Section A deals about, what is Section B and the Section C. We can see that Section A gives about contains details of the listed entity, the product and the services, details of the operations, employees, what is their holding, what is the subsidiary and the associate companies. Even it will include the joint ventures if there are, the CSR details, transparency and the disclosure compliances. The Section B contain the disclosure questions which might be related to the policy and the management process, governance, leadership, and the oversight. Now, the Section C is the most important one because it describes those 9 principle-wise performance and disclosures need to be done. So this is Section A. Section B, if we see broadly, it's been divided into policy and management process. Similarly, governance, leadership, and oversight. The yellow color here demarks that it is an essential indicators, which is mandatory ones, like coverage of policy, approval by the board, the web link, what are the policy to procedures, what is policy for the value chain commitments and the goals, performance against the goal. In case of governance, leadership, and oversight, there is director's statement, which is the highest authority, details of the committees, review of the performance, review of compliance, independent assessment that has been taken place, and reasons for the exclusion. Now, coming to the Section C, which talks about the principle 1, businesses should conduct and govern themselves with integrity and in a manner that is ethical, transparent, and accountable. If we see, it broadly talks about the training, what are the different fines and the penalties, what is the anti-corruption policy of the company, the different awareness program that they have conducted. So if we see the bifurcation, the essential indicator deals with what are the training and the awareness program, details of the fines and the penalties, anti-corruption or anti-bribery policy, details of the conflict of the interest. But if we see the leadership indicators, which is again voluntary basis, it deals about awareness program that is conducted for the value chain partner, what are the processes in place to avoid and manage the conflict of interest. Coming to principle 2, it talks about the businesses should provide goods and services in a manner that is sustainable and safe. So in this, the essential, which is the mandatory ones, it discusses about the research and development and the capex for technology, sustainable sourcing, processes for the safe reclaiming, and EPR applicability, extended producer responsibility. Now, when we talk about the leadership, it talks about the life cycle assessments, which is also known as the LCA, significant environmental concerns, percentage of the reused material, and reuse, recycle, and the safety disposal of the products and the packaging in which they are involved. Coming to principle 3, it talks about the businesses should respect and promote the well-being of all the employees, including those in their value chains. Now, coming to the 2 indicators, if we talk about the essential, it talks about measures for the well-being of the employee details, of the retirement benefits, accessibility of the workplaces, return to work and retention rate, health and the safety management system. If we talk about the leadership, which is the voluntary ones, it talk about the life insurance or any other compensatory package, measures for the statutory dues, transition assistance, and assessment of the value chain partner. Coming to principle 4, it talks about businesses should respect the interest of and responsive to all the stakeholder. In this, the essential indicators is processes for identifying the key stakeholder group of the entity, the list of the stakeholder group identified as key for your entity. In leadership, it talks about what are the various processes for consultation between the stakeholders and the board. Stakeholder consultation is used to support the identification, the management of the environmental and the social topic transition assistance. Coming to the principle 5, it talks about businesses should respect and promote the human right. Now, essential indicators in this is training on human right issues, details of the minimum wages paid, details of what is the remuneration, salary, and the wages, focal point, who is the individual and which committee is being associated, whether there is a mechanism in place to redress the grievances related to the human right. Now, coming to the leadership, it talks about what is the scope and coverage of any human rights due to the diligence conducted, premise of the office of the entity accessible to the differently able visitors, and assessment of the value chain partner. Now, coming to principle 6, now it totally deals with the environment aspect of the sustainability. So businesses should respect and make efforts to protect and restore. So when we talk about the energy, the consumption intensity or the PAT, and if we see the voluntary aspect, there we need to disclose about what is the breakup from renewable and the non-renewable energy resources. In case of water, we have withdrawal by source consumption, intensity, zero liquid discharge. And if you see the voluntary aspect, there is discharge by destination and the level of the treatment in the water stressed area. When we talk about the air emissions, what kind of air emissions has been released if there is. When we talk about the GHG emissions, we have to disclose scope 1 and scope 2, but scope 3 disclosure is voluntary. In case of the waste, plastic, e-waste, biomedical waste, construction battery, all this need to be disclosed. Whereas in this segment, if we see about the voluntary disclosure, it's talk about the significant direct or indirect impact of the entity on the biodiversity and remediation measures that they have taken. What is the innovative technology for the resource efficiency that they have been using? Now, when we talk about the impact, we talk about the various clearances that the company need to get, that is environmental impact assessment, what are the various compliances and the non-compliance details related to the environment. When we talk about the voluntary disclosure, it talks about the business continuity and the disaster management plan if they have any significant adverse impact to the environment from the value chain and the percentage of the value chain partners assessed for such impact. Now, when we talk about scope 1, 2, and 3 emissions, so scope 1 is basically all the direct emissions that the organization and that is being released by the organization due to their activities and under their control. When we talk about the scope 2, it is an indirect emissions, for example, the electricity that is purchased and used by the organization. Now, whatever is left that comes under the scope 3, which is not in direct control and neither it is being owned by the organization. It might be occurring due to the source transportation that has been happening. So it is a greater share of the carbon footprint, which is scope 3 emissions. Now, coming to the principle 7, it deals with businesses when engaging in influencing public and regulatory policy should do so in a manner that is responsible and transparent. Under this, the essential indicators, it is affiliation with the trade and industry chamber and association, details of corrective action taken and underway, or any other issues which is related to the anti-competitive conduct by the entity. Now, the leadership one is detail of the public policy positions advocated by the entity. Coming to principle 8, which talks about businesses should promote inclusive growth and equitable development. In this, the essential indicators are social impact assessments of the project which is undertaken by the entity, whether there is any mechanism to receive or redress the grievances of the community, and what is the percentage of the input material sourced for the suppliers. In this, the leadership one, actions, if any, taken to mitigate any negative social impact, what are the detailed information about their CSR projects, what is their preferential procurement policies, and who are the beneficiaries of the CSR project. Coming to the last one, Principle 9, which talks about the businesses should engage with and provide the value to their consumers in a responsible manner. In this, the mandatory one is whether there is any corrective actions on the issues relating to the product delivery. When we talk about the voluntary, what is the percentage of the product with environment and social parameter, safe and responsible usage, recycling or the safe disposal, and the consumer complaint. So this completes with an overview of the module 1 and the module 2. What is the coverage? What are the important key topics that is being given in the module 1 and 2? Now coming to, we are giving you some of the sample questions in which you can expect the kind of the questions that may become. For example, if we can see the first question, the question is, there are dash goals under United Nations Sustainable Development Goals. So we have total of 17 SDGs, which are mentioned in the United Nations framework. Now, question number 2 is, how many principles are there in the business responsibility and sustainability report? So there are 9 principles. Now, which organization developed the sustainable development goals? So this was developed by the United Nations. Question number 4 is, in the context of sustainability reporting, what does SDG mean? So the full form of SDG is Sustainable Development Goals. Coming to module 2, which deals with the BRSR. One of the sample questions is, the BRSR reporting system is divided into how many sections? So it is divided into 3 sections, the general disclosures, and the third section, which exactly deals with the principle based. If we see the next question, which of the following is not a principle of the BRSR? So the B point, which is businesses should be accountable to the stakeholder. So this principle is not a part of the BRSR. Sample 3, what are the 4 components of BRSR? So BRSR covers all the governance, ethics, social, environmental, and the economic parameters. Sample 4 is, a company's carbon footprint is a measure of its environmental impact in terms of the greenhouse gas emissions, is the answer. So now the rest of the modules will be taken over by 2 other faculties. So the module 3, 4, and 5 will be conducted by the other faculty. And before the lunch, we will together have a question answer session for all the 5 modules. And then there will be a break of 1 hour, and then we will continue with the rest of the 4 modules.
Hello, everyone. We are receiving so many questions regarding the background material, revised background material. Don't worry about that. We have already emailed one set of round to all the participants. We will again send it through email to everyone, the revised background material, and we also posted on our SRSB page on ICI.org. And as far as the PPT is concerned, today we are just going through the revised module only. We are not having any particular PPT in which something else is given. So we will share the previous PPTs which is given by the faculties. What we have, we will share it through the email to everyone for your knowledge enhancement. And one more question we are receiving is the question bank, sample question bank, which is already covered in the revised module only. We are announcing the 5 minutes break. Then we will join again for the module 3. Thank you. This background material is enough for your study for the exam purpose.
Hello.
Hello, ma'am. We are
Yes.
given a 5 minutes break. Five
Okay.
minutes break.
Okay. Okay. No problem.
Hello, everyone. Now we are starting again. We are continuously receiving a question regarding whether the recording of this session will be available to all the participants. For this, we are sharing the link of the recording with everyone on email with the revised background material and sample questions and the PPTs what we have from earlier batches. Also, this is regarding the today's lunch break, which is at 1 p.m., 1 to 2 p.m. And one more question we are receiving is
So basically, the participants who are from the batch number 2021 and
yes.
22, you already have the revised material, revised PPTs and the recordings. Whereas the participants who are from the batch number 1 to 19, we will be providing you with the latest recordings as well as the PPTs and some of the sample questions.
We would also like to, mention that the participants who have joined in 20th batch, 21st and 22, they are not required to pay the examination fees again. It is free from them, and the earlier batches participants have to pay the online examination fee or for the examination email which is sent to all the eligible participants. Please check your email once and go to your spam folder also. Maybe the email which is we have sent will go into your spam folders. Please check it again. If you don't receive the same, please email to us at sustainability@icr.in or BRSR course at icr.in.
Also, in the Google form, you have to choose any one respective date out of the three. That is 13th April, 20th April, and 28th April. You have to choose just one. And the last date again is 8th April 2024 to send your confirmation if you want to give examination out of any one of these dates. Also, please make sure that whenever you get the link for the face registration and face authentication, you have to use your PC or the laptop. Please don't do it with the mobile devices like the phone and the tablets.
And we also request to all the participants, the face recognition will be done by the last date only, because we don't want any participants will be miss their online examination due to this face recognition delay. So please do the face registration on time, please. Now we are introducing our speaker, Harsha ma'am. CA Harsha Ramnani ji. One second, ma'am. Harsha Ramnani ji is a fellow chartered accountant and having a diploma in information system audit and commerce graduate from the Kanoria Girls College, Jaipur, and she is having a rank 1. She is also a registered valuer for the securities and financial assets class and have certification in forensic accounting and fraud detection, concurrent audits of bank, Ind AS, BRSR, and public finance accounting by ICA. She is also cleared the social auditor exam first in Rajasthan and topped it she is amongst the top 10 in India. She is having a vast exposure in the profession like audit assurance, management consultancy services, NTS implementation, IFRS convergence, valuation of securities and financial assets, enterprise risk evaluation, impact assessment analysis, BRSR reporting, ESG analysis and reporting, financial due diligence, project monitoring and capex audit, CPM and SOP and ABP preparation, internal financial control testing, anti-dumping and anti-subsidy cases, transaction-based audit, forensic audit, company law-related compliances. Over to you, ma'am. We welcome you to address our participants, and over to you, ma'am. Thank you.
Thank you, Shweta and Chindu, for introduction, and good morning, everyone. So, particularly if we can have few slides on background of ESG, so that will be beneficial for everyone.
Yes, ma'am.
Okay, so I'm just sharing my screen with a few of ESG slides. Okay, I hope my screen is visible and voice is clear to everyone here.
Yes, ma'am.
Yeah. So just to have a background with ESG reporting and ESG implementation. So it is a kind of approach. First of all, we need to understand about the pillars of ESG, the background of ESG. So full form of ESG comes as an environmental, social and governance, where governance normally we should keep as a first to make, quality of the process for decision making. And when you have a quality of process for decision making, accordingly, environmental aspects, social aspects can be covered. So, what I understand from my background and experience that in every organization, the quality of process for decision making always works as a driver or a pillar for rest of two sections where corporate governance and corporate behavior is the important. When we talk about environmental aspects, so the first priority for every organization is about the climate. So climate change, climate, impact we all can see, and this is one of the priority for all the listed companies, for all the organization to report on and to work on their manufacturing facilities. Second comes as a pollution, where I'm not sure whether everyone is more familiar about. Recently also, the Pollution Control Board on March 14, 2024 issued guidelines, revised EPR guidelines, which is applicable to all the companies who are working in a different domain, and the coverage is also being increased. So in earlier guidelines, if I talk about on EPR side, it was only for producers, manufacturers and the brand owners, whereas for the current updated guidelines, it is also covering the uh, other categories, which includes your supply chain management. Then it comes to the biodiversity and resource utilization. So these are the four pillars where environmental aspects we need to cover. And when it comes to the social aspect, so it majorly covers about the social capital, human capital, and the customers and supply chain management. So for supply chain management and customers, this is something which I considered normally every organization is taking care of that. Social capital and human capital is an area where organization needs to put more efforts, and they need to contribute more on the fairness of society. So these are the three pillars exactly where our complete BRSR report is somewhere, stands out. In terms of ESG reporting, first if we talk about, so it is required the integration within the business and strategy. So I think Chindu already covered about first module where it was mentioned that integration with the current business practices and strategy is important when it comes to the ESG implementation and BRSR reporting. Second is, if you, Chindu already explained you about principle 1 to 9, where probably everyone has now a good flair that every question and every particular, response where BRSR report is expecting, it is somewhere outcome linked. It not only asking about whether you have certain programs, whether you have certain initiatives within your organization. It is also asking about the outcome of the program. It is also talking about what you have, get from implementation of the particular program. So when you have a flair of the BRSR format, when you have a flair of the principle 1 to 9 format, it more talks about the outcomes, that after implementation of certain initiatives or a program, what is the outcome that organization is getting on these three pillars very specifically. And the last one is listen to your stakeholders. So this talks more about that, whether you are involving your all stakeholders in each and every step of the ESG reporting or ESG implementation. So it's more about inclusion of the stakeholders, you need to identify who are your stakeholders and how you are engaging them, how you are including them in your regular interaction, what is the mode of interaction, what is the frequency of interaction. These all things talks in more about BRSR disclosures requirement. The global reporting framework, which Indu discussed with all the participants from module. So this is just a pictorial presentation. And the objective of all these global reporting framework, if we talk about, so it's about building trust, first of all. Second, to have a better transparency. And on top of the risk and opportunities, so ESG reporting, ESG implementation not only have a cost for the organization, it also have a many of the opportunities. So if we talk about more on an industry aspect, recycling industries are now in demands. So if you are thinking to have certain facilities or to have expansion of your business, somewhere the opportunities which you can think about is on a recycling or reusing of the existing material. That is the industry where you can explore interest as a business or as a consultant or in any other capacity. And last but not the least, it always includes increase the value within the complete ecosystem in a society, where as a business you establish yourself not only to earn profit but also to taking care of the social aspect and the environmental aspect. So these are few global reporting framework which Chindu already discussed with everyone. More or less, GRI is the popular framework, being the oldest one and being used by many of the MNCs. TCFD and CDP is the framework which is being used by the manufacturing facilities who wants more detailed report on a climate change aspect. IFRS also recently issued two standards, S1 and S2, and which is applicable from January 1, 2024. So now we have a separate standard, similar like to have accounting standard from IFRS side. Again, when you read all these standards, it is more, content is more taken from the GRI standards. So it's more or less similar to the GRI standards. And integrated reporting, it is recommended by SEBI itself in 2015 year, where it is being requested to all the listed companies to have an integrated reporting system where they includes the non-financial reporting as well with a financial reporting segment. So this is just a pictorial presentation of few global reporting frameworks and the standards, where first two are the standards, GRI and SASB. As I said, GRI is the most popular and being widely used by the MNCs, where three type of standards are there. One is our universal standard, set of standard, then comes to the industry focused standard, and last comes as a topic wise standard. So that is the reason many of the MNCs are using GRI, because in GRI, very specifically, we have a set of standard which gives us idea and a background for topic wise understanding. For example, we talk about text. Now, anyone can think about how text can be correlated with the non-financial reporting or ESG reporting framework, but you will get a complete guidance on a text GRI standard, that how you can have a good governance practice in terms of the tax department and how company can move it further for the ESG compliance. And risk 3 are the reporting framework and a practice which gives an idea about how to report our initiatives. So IR is one of again popular framework where 6 capitals normally we talk about, and TCFD. And now we have our own BRSR reporting framework. So TCFD is normally being, CDP and TCFD is normally being used by the companies who are more inclined towards the climate action and changes. BRSR now I think we all are familiar about, and we have discussed a lot about the BRSR, and it's actually a time because we are in March where we need to have more understanding of the requirement. Last year itself, in July 2023, SEBI has come up with the BRSR core for assurance of top 150 companies. And considering that core requirement, BRSR disclosure format is also again amended, which we need to take care. because the last year report, if you see, and the current year requirement, there are few changes in a BRSR disclosure format, which is important for all of us with respect to the exam as well as for the practical application. So this is about global landscape. Assurance, we will discuss in 2 to 5, when I'll be there for the assurance aspect and the materiality aspect. So for now, I'm, escaping this part. I think BRSR already discussed. So I request now Chindu and Shweta, if you have any queries with respect to the modules, which is being discussed by Chindu, so that we can take from the participant.
Ma'am, no queries related to this. Let me check once.
Yeah, please.
वही बोलो recording हम दे रहे हैं.
The participants are continuously asking for the recordings. Please, we will ensure you that you will get the link of the recording, because every recording is available on ICI TV in the channels of a particular department. You can go through that. If you Google the ICI TV and go to the channel Sustainability Reporting Standard Board, it will be all the recordings will be available there. Once today's session will be over, the recording will be available there.
Many participants are asking from where to prepare yourself for the exams. You have to prepare from the revised background material, as well as we will be sharing you the recent PPTs which was given in the batch number 22 to all the participants.
For face recognition, we will share the separate email, because once we get the registration through the Google link for the examination, we will share the final link for face registration.
Again, the last date is 8th April to choose the exam dates out of all the 3.
Harsha ma'am, there is a one question by the participant that SEBI circular dated 12 July 2023 on BRSR core. Are you referring that?
Yeah, I'm referring the recent circular where BRSR core was introduced for first set of companies, 150 companies, and accordingly few changes have been made in the BRSR disclosure format itself, which is mandatory for top 1000 listed company. So I'll just give you update that what exactly are new amendments and what exactly new addition in the principal requirement. So if I talk about section A very specifically, it only have 2 new additions, where in a 14th and a 15th question, they are asking about the assurance type, and second, who are the assurance provider. So for 150 companies, it is mandatory to have a reasonable assurance. So it is mandatory to report in section question number 14 and 15. Rest of 850 companies, they can voluntarily choose in for the limited assurance or reasonable assurance if they want, and if they are taking a assurance report from any of the assurance provider, then they need to include the details of assurance provider. Section B, if I talk about very specifically, so it talks about the international code certification. So this is a old requirement, but again, it is asking for more details on standards, and if any of the company has obtained any certification on that part, so they are asking the detail about assurance provider or the independent agency whom they have appointed for conduct these type of certification. In principle 1, so other details are old one. The one only aspect which they have added here is number of days of accounts payable, average accounts payable payment for the cost of goods and the services procured for previous year as well as for current year. So this is one, again, a new addition. And the next new addition is about details of purchase and sale from trading houses, dealers, related party, along with loans and advances investment with the related parties. So this was not there in a previous year and added for the current year report, where you need to give a details with for the transactions with your related party, second with the trading houses and the dealers. Objective to add this question is here that whatever the outstanding you are having within your books of accounts, how much percentage is for MSME and for other non-MSME partners, and second is about how many transactions you are having on a regular basis with a small organizations or a small players like trading houses who are just trading, not having a complete manufacturing facility, dealers who are trying to get few business from the manufacturing facilities, and the related party. So this is one new addition in principle 1. In principle 2, a new addition is for volume of the business done with these suppliers who are having a certification with SA 8000, ISO 14000 and OSAS certification 18000. So this particular requirement is added in principle 2, reason being to get a understanding whether as a business you are trying to get a player, supply chain management or a vendors who are also following the same principles of ESG which your organization is following. So basically the SA 8000 or ISO certification, these are something which you get as an organization when it's come to have a good social principles within your organization or good social policies and environmental policies for your organization. So this is to promote manufacturing facilities to have business as a vendors or suppliers with the players who are somewhere following the ESG parameters. So these are two new things in principle 2. In principle 3, there is no as such new addition. So it is more or less same with previous year. Principle 4, if I talk about, so one addition is there, which is gross wages paid to female as percentage of gross total wages paid by the entity. So just to have a more, brief or clear picture about gender equality, this particular addition has been done in essential indicator, which gives the idea that okay, you have a certain percentage of female employees or workers within an organization, whether the organization is also paying same percentage of salary or a wages to the female participation, or is there any variation? So this is one addition in principle 5, which is for human rights. For principle 6, just a minute. Yes. So these are two important new addition, which is actually, talk of the town very specifically for the organization. First is the revenue from operation adjusted for PPP and water intensity in terms of the physical output. So PPP, that is the purchase price parity, it is being introduced in BRSR core itself and accordingly amended the BRSR disclosure. So for essential indicators, it is mandatory for all organization to report the revenue from operation which is adjusted to purchase price parity. That means if certain goods you are buying from your home country, whether it is having a similar power to the other country as well, or is there any change? So normally the comparison we do with the US dollar, and there can be a different currency as well. For example, if as a business you are having a more buyers in a Europe side or maybe any other side, so that base currency you can take for the calculation of PPP. And one more addition is in principle 6 is about the implementation of mechanism for zero liquid discharge. So this is for that whether the organization is having a zero liquid discharge which is harmful for the environmental aspect. If yes, what are the mechanism and what is the capacity of that mechanism? So many of the manufacturing facilities normally have a RO plants, ETP plant, HTP plants for zero liquid discharge, where they treat the water which they are having from their manufacturing facility, and after treating that water they are using that as per the based on the treatment, whether it can be used for gardening or plantation purpose, or it can be reused in the manufacturing facility. So these are two new addition in principle 6. Rest is same. Then principle 8 is more or less same. And principle 9 is again more or less same. There is no particular change. So these are few changes which again, being introduced because of the BRSR core. And if any query from BRSR principle, so that we can take right now.
Ma'am, there is one question. Who will play assurance role? Any clarity from SEBI?
So from SEBI FAQs, there is no specifically mentioned that only chartered accountant will be eligible as an assurance provider. It is being left with the board of directors for the company. That board of directors will decide that who are the competent person to perform a assurance function. So it can be a chartered accountant, it can be any other professional person. It is left with the board of director. They will consider, they will decide who is the competent one. Being a chartered accountant, we are eligible to perform assurance for SSAE 3000 and ISAE 5000. For AA 1000, if you have certification for that, then you are also eligible to perform assurance for AA 1000.
Ma'am, one more question. SEBI has in its latest meeting amended market capitalization. So for the purpose of calculation of market capitalization, will new direction apply?
Yes. On 31st March 2024, the list which will be given by the NSE and a BSE exchange platform, that will be considered for the purpose of top 1000 listed company. And the same thing actually written on the original notification, that what should be the cutoff date for application calculation of the market capitalization. So that is 31st March 2024.
Ma'am, one more question. There is a draft disclosure framework on climate-related financial risk 2024 as per RBI circular. So whether this disclosure framework is in addition to the BRSR reporting to be made by the eligible entities, which like top NBFCs, etc.
Yeah, it will be the additional requirement, but right now it is only a draft disclosure. So currently it is not mandatory. Phase manner application is also given in that draft disclosure, so that we need to see, and accordingly the application of reporting framework will be applicable to the banks or the NBFCs or to the eligible entities.
Ma'am, the participants are asking for the revised material, which is available in the SRSB publications. It is not yet available. Once the session is over, we will just publish it and share the link with all the participants. Thank you, ma'am. Thank you for taking this session at a short notice. We request, we would like to welcome our next faculty for the session is CAS Badri Narayan ji. With his wealth of knowledge and expertise in chartered accountancy and company secretary and law, maybe, and he's having an in-depth knowledge of IBC's matter and ESG. So we thank you, sir. Thank you for coming and joining us today and taking this session. Over to you, sir, for enlightening us on this module 3, 4, and 5 to our participants. Thank you, sir. Over to you.
Thank you, ma'am. I hope I'm audible.
Yes, sir.
And the slides are visible, right? The module is visible, right? Is it visible on the screen?
Yes, sir.
Yeah, thank you. Thank you so much. First of all, thanks for Harsha ma'am for giving that introduction. So our agenda is in the new curriculum, in the new syllabus, which has been devised with a lot of efforts, a lot of review has gone into it to make sure that the participants, the members are, have the benefit of updated references, updated knowledge on ESG. So really a lot of effort has been put on by SRSB. I appreciate their effort on this. And it has also made sure that it is in line with the global developments, because there's no point in outdated knowledge. So we have to keep ourselves updated. And this is one step in such updation. So our agenda for the 3 sessions are module 3, 4, and module 5. So basically we'll, rather than seeing what has changed from previous background material, I'm not sure that will serve much purpose, because now you have to prepare as per this revised module. So it's better that you get a grip over the revised module. And there are a lot of changes. So you really can't pinpoint and see what the changes are. And this is a good thing only that you are learning a new revised thing. So you'll be updated with what is happening on in the real world scenario. So it's not just for exam purpose, it is also to improve your skill sets. So module 3 talks about deep dive in governance issues and risk management. So when we say ESG, the G part gets ignored quite a lot, which is the governance part. And so I always say this that a good corporate governance is much more than compliance with law. I mean, compliance with law is mandatory; it has to be done. But corporate governance is one step more, two step more than a required compliance. Then only you are known to be, a leader in corporate governance. So similarly, like activities like CSR, ESG, all these things require you to set a benchmarking standard, not to follow a benchmark, but keep on improving to a level that you set a standard. So it's a lot of philosophy, board philosophies involved, a lot of top vision strategies involved, direction, mission statements. So there should be a tone at the top. So the board should realize how important is ESG for the company, how important it is for the stakeholder. It is for the board of directors, the managing director, chairperson, all the top level functionaries to be really aware and to take this seriously. Till date, it might have been a perception that this is not being taken so seriously and not many steps were being taken. Now, since it's mandatory for top 1,000 listed entities, in fact, now there is a refining of the BRSR, right? We have July 2023, we got the BRSR core circular and a lot of additional factors like Harsha ma'am was telling. So some new factors have already been included. 9 KPIs were included in the attributes and more data is being sought. In fact, if you check BRSR core, and it gives a revised BRSR format. And if you compare the revisions, now some indicators which were leadership indicators previously now have been pushed to essential indicators. That means from voluntary it has been pushed to mandatory indicators. That shows the policy change and the policy sensitivity towards ESG and sustainability reporting, how much importance is being given to this area. And I keep thinking this and I keep telling others also the day might not be far where there are fiscal or taxation incentives based on how you're doing on sustainability reporting or sustainability agenda, right? So it has become the need of the day, and it's a huge opportunity. It's an opportunity we are seeing in making before our eyes, as members of the institute, and the institute is doing a lot of work in this. If you are able to upgrade your skill set in this area, this is something which is new and evolving with every day, every passing day, every global change, every global regulator policy, every global standard. It is evolving, right? And we are also seeing a lot of action in India. So if you are able to upgrade your skill set right now in this, you can definitely make a good opportunity of this. You can definitely set up a practice also on this, a different vertical on this. And it's new for everybody. If you see taxation audit, you have a lot of players already. But this is something which is new and everybody has to learn from scratch, right? So that's why it's also important that we stay updated. Even after this is a preparatory batch so that all the students who want to give exams are giving in the same, they have the same level of understanding. We will try our best in doing that. But after this also, you have to keep
Sir,
your...
sorry to interrupt you. Your voice is little low. Can you please be louder?
Is it better now? And can you ask others also? Is there a way to ask?
Yes,
if
sir.
others-
We are receiving a query from the participants.
Is it better now?
Yes, sir.
Okay. Okay. So that's why it's important that we stay updated, not only for this preparatory batch, even afterwards this, you have to keep updated with this. So today's agenda will be to see the revised module and get you some grips over the concepts or basics which we have tried to put in the module. The first module will be module 3, deep dive in governance issues and risk management, right? So first of all, when you read this, what are you going to get out of it? When we talk about governance, the first thing that comes to mind is the board of directors, right? They are the visionaries, the tone setters, the top management who are going to drive the sustainability agenda along with all other agendas also. So we will talk about board composition and what role they have in BRSR. We'll talk about how ESG is transforming the corporate governance, how there can be specified board committees for ESG. So if you see a lot of companies now are having a separate ESG committee in order to tackle the ESG issues and challenges, how anti-bribery and anti-corruption policies should be built in, how there should be ethics and good code of corporate behavior, ESG evaluation, and so what challenges we are facing when we are trying to implement ESG. And then we talk about risk management, what kind of ESG risk assessment is to be done, and how to integrate ESG, and some case studies like how reporting is being done by some companies that also are covered. So, as I said, a very detailed revamp has been undertaken with respect to the material to ensure that the participants get the best of information, right? So when you talk about how ESG is transforming the corporate landscape, so till now it has been a shareholder theory, maybe so we can say that 2011 National Voluntary Guidelines was brought in India. That was the first step. After that, you got BRR in SEBI, then it shifted to BRSR. And 2015, you got the SDG, United Nations Sustainable Development Goals. But all these actions have picked up only in the last 10 years or so. Okay. Before that, it has been primarily, even now, in many companies, it has been a shareholder theory where the main motive is to earn profits. But now the shift is enormous. The shift has gone from shareholder theory to a stakeholder theory, where you have to understand the interest of all the stakeholders and you have to balance their interests and you have to ensure that it is taking care of all the stakeholders. You can't only work for the agenda of shareholders only to drive the profit. Bottom line, profit bottom line cannot be the sole agenda. It has to be a triple bottom line approach, which includes planet, people, and profit. So now the situation is such that the corporate world has to work beyond the traditional profit-centric approaches, and they have to understand the interconnectedness between environmental, social, and governance practices. Right. So this is the introduction part where we are trying to connect that link that why it is important. Now, also you have to read it in a way that you are able to remember it and link it to any possible examination question. So uh, you can't really have a questionnaire for ESG. Okay, you have to understand the concept, and we have given some broad factors, key trends, consideration. You'll have to understand that it might come by way of case study or some question. So you should just try to absorb all these key factors. So first, we have given the factors which have contributed to this transformation. How ESG has become such an important talk for the boardroom. So this is basically some of the factors. First is investor focus. Now the investor philosophy has changed a lot. Now a lot of hedge funds, venture capitalist funds, all of them are looking at the investment philosophy in a way they want to invest in companies which are socially responsible, which are environmentally responsible, which have good governance practices, and they really want to stay away from companies which are not so good in ESG parameters. So a company can be inherently negative environment-wise, like suppose cement industries. They have inherent problem of pollution, and power industry. They also have to burn coal to produce thermal power. Is like that only. Inherent problems are there. That doesn't mean they will close down the business overnight. How are they mitigating those effects of their inherent emissions and inherent challenges, ESG challenges? And are they able to mitigate in such a way that they are able to become net zero, right? So the investors' philosophy is now shifting in such a way that what a company is doing, first of all, to mitigate the ESG risk. Second, to set a better benchmark to improve the ESG parameter and to enable stakeholders value creation instead of shareholder value creation. So investor focus has changed tremendously. Now you have ESG index funds also, which focus on portfolios on companies where ESG activities are going good, and that is now setting multiple funds are now coming on this theme on ESG, right? So investor focus is one reason why the board is considering ESG more. Second is shareholder activism. So you would have seen that now in India also we keep on hearing that some proxy shareholder or minor shareholders have created questions on how the board is working and why certain concerns are not being addressed. That is true for even ESG. So a lot of shareholders have sparked their concern on ESG practices of the companies or lack of ESG practices of the companies, or maybe concerns on the climate change, that the company might be operating in a way which is very bad for the climate and it might invite scrutiny from the regulator going forward, or it might even hit at the very survival of the company. So a lot of shareholder activism also has contributed to board's focus on the ESG importance. Then you have regulatory pressure. So globally, we are seeing that everywhere now we see some standards coming up, whether it's IFRS S1, S2, or assurance standards like SSA 3000. We have ISA 5000 draft has come. So there are a lot of activism globally happening on regulatory part. It has been becoming more mandatory now to disclose your ESG practices, and more strict standards are coming. Assurance is becoming mandatory in many parts of the globe. So all this is building up pressure, and board of any company has to adjust to these changing dynamics. Then you have consumer and stakeholder demands. All the consumers want to buy products or services from a responsible company, right? They don't want, now organic has much more, it's a trendy word, and also it has much more interest. So people want to buy products which are animal friendly. Cruelty to animal is not in the process. The products or services are not affecting environment. So that mindset change has also happened, and this will be affecting the demand for a company's
Actually,
product or
no.
services.
Sir, sorry to interrupt you, but the participants are keep on saying that they are not able to listen you properly. Your voice
I'll
is too low.
disconnect my AirPod and I'll just try to, yeah, wait.
Yes, sir. Sure.
Am I audible now?
Yes, sir. Better now.
Should I start again or should I continue?
No, continue, sir.
Okay. So just to give a brief, maybe people could not hear why boardroom is taking ESG seriously. First, investor focus, investor philosophy has changed, and ESG is considered more important now. They want to invest in companies which are responsible, both environmentally, socially, and who has good governance. Second is a shareholder activism. Shareholders are raising questions. They want their company to do good on ESG parameters. Then we have regulatory pressure. Globally, many changes are happening. Many standards are coming, like IFRS S1, S2, and you have assurance standards. A lot of places assurance is getting mandatory. So there is a regulatory pressure which also the board has to be sensitive about. Then you have consumer and stakeholder demand. So consumers want products which have not been built by giving any cruelty to animal. They don't want any product which has an impact on the climate or the environment. So that is affecting the demand dynamics. So people want to be responsible consumers, right? And the stakeholders like employees, they want to be associated with good companies which have good labor practices, good wage practices, which have fairness and equality as their base. So all the stakeholders, just employees I have illustrated, but all the stakeholders want to be associated with good ESG practicing company. Then you have risk mitigation. So there are a lot of ESG related risk which happen, right? So even when we see BRSR, that has a particular table which says that you have to identify material ESG issues, and then you have to tell if it's a risk or opportunity, your rationale of identifying it as a risk or opportunity, and how you're going to deal with it, right? And if it has a financial impact or not. So risk management is very crucial. If you don't assess ESG parameters, you will not identify what ESG risk the company faces, and then it can even end the survival of the company. So from this aspect also, ESG has become very important for the board. Innovation and competitive advantages. So the board realizes that when you press more on ESG parameters, you are then bound to innovate. You are able to find solutions and creative ways to tackle the ESG issues, which it can be waste disposal or using of clean technology, more use of AI, and water consumption can be optimized, power consumption can be optimized. All these things can happen when there is a overall change in the perception and overall change in the vision of how ESG has to be tackled. Reporting and transparency. Everybody wants a proper reporting these days, right? The users of financial statement, the users of ESG statement, they want to know accurate, reliable information. So when board gives more focus on ESG reporting, such kind of transparency is able to be conveyed. Then you have sustainable business model. Now everybody wants to look at a long-term growth story. They don't simply want a short-term profit story. So this also the board is now taking into account. Now, what are the key trends? So now this section explains the key trends which help in the transformation. First is the standardized framework. Now you have a lot of standardized framework like GRI is there, SASB is there, TCFD framework is there. IFRS S1 S2 came up for financial reporting of climate issues and all, general ESG disclosures, right? So there is a lot of now standardized literature which can be used. So before BRSR, we had BRR, and even when BRR was there, companies were reporting on GRI standard. They were mapping BRR with GRI. Now they are mapping BRSR with GRI. So now you have good standardized framework. In fact, the recent frameworks are allowing interoperability. So BRR is an interoperable framework. You can always refer BRSR to GRI standard. Similarly, whatever is now the European standards which are coming, they are also being built in a way which is interoperable, right? Second is a heightened focus on materiality. Find out what ESG issues are material. That is becoming a key trend. So we can't say all issues are material for all companies. No, certain industries, certain issues will be very material, and certain might not be relevant at all, and vice versa can happen in other industries. So there is a heightened focus on materiality. Then integration of technology like blockchain, artificial intelligence, Internet of Things, all this is helping in your data collection. And when we go on reading, we also have heard in our sessions that data is a major challenge in ESG compliance, because companies might not be ready for such kind of compliances. They might not have established internal controls which will help in ESG reporting, proper ESG reporting, and that becomes a big challenge. So technology, it's an emerging trend on how ESG reporting can be transformed. Then you have stakeholder engagement. So more frequent interaction is happening with stakeholders. Their concerns are being taken, their feedback is taken to streamline the reporting. Then you have regulatory bodies and stock exchanges. Everybody is getting strict. Everybody is making ESG mandatory, and that is also a key trend which is leading to the importance of ESG. Now, what are the focus areas in transformation? Right? Again, these are similar points only, just from a different angle. So material issues we have to check, standardized framework we have to check. Assurance is becoming very crucial. Now, you have financial statement and you have audited financial statement. You will obviously have more reliance on an audited financial statement. You would want audited financial statement if you want to invest into some company, if you want to do an M&A. For everything, you'll want an audited statement because there is an independent opinion given by an expert. So similarly, in sustainability reports also, you would want, obviously you'll want an assured sustainability report to have more reliability on it. If you want to make an investment decision, ESG based investment decision, you will obviously want to refer to an audited sustainability report. So assurance can be internal, where they use in-house team just for checking if the data is proper or not. That can be an independent evaluation. Assurance can be external, where you appoint a third party to do a proper independent assurances. Now in assurance, you have limited assurance, you have reasonable assurance. There are various levels within them also. But assurance has become a key. So we have seen in sessions that S&P 500, almost 1/3 companies of S&P 500 are doing assurance of their sustainability reporting. This is going to play out in India also. As on date, assurance is not mandated apart from BRSR code. July 2023, BRSR code circular came where certain components have to be mandatorily assured. Apart from that, we don't have a mandate to have the assurance done, but this helps in increasing reliability and transparency. Then integration with financial reporting. So now you would have seen a lot of companies are doing carbon accounting, quantifying their carbon emission, and then even assuring their greenhouse gas statement, right? And now the idea is to how to put a value to the non-financial information, to the financial statements. So that impact, how to show that impact in the financial statement of ESG. That is very subjective and very difficult to capture, but a lot of work is going on this field. Investors are increasingly demanding that ESG factors should be there, and investment philosophy, as I said, is changing. Then there are regulatory changes, and there are sustainability risks, like climate change is a big risk. Water scarcity is a big risk. You might have heard that in Bangalore, people not having drinking water also. So, and you are having rains in deserts, and vice versa is happening in other areas. And the climate change is a risk which we are seeing in front of us, and it is impacting. Obviously, it is impacting the companies also, which survive on the ecosystem. Then the section talks about your board of directors and BRSR reporting. So we've just tried to explain what are the top categories and broad headings under which the board might be thinking or working on, and who takes care of that. So on the right side, if you can see, we have given the functionaries like CEO, Chief Sustainability Officer, CFO, Chief Revenue Officer, like that. We have given try to give a uh, we can say a responsibility, accountability area for a particular designation. So the first job you can say for a board is to set strategic guidance, right? The board has to set the tone at the top. So we keep on hearing this, right? The tone at the top, the mood in the middle, and buzz at the bottom are very important for getting anything done. So the top management has to set the vision and mission and guide, also put the strategy in place. The middle management has to implement those strategies, and the lower management has to take care of the day-to-day activities to align with both the middle and top management's vision and implementation. Without that, this doesn't happen, right? So board has to enforce and ensure a robust BRSR framework in place that includes having proper internal controls also. So board is responsible for strategic guidance, that what should be the approach. They have the responsibility of oversight and monitoring. They have to monitor what is happening. Is the guidance being followed or not? What are the gaps which have to be fulfilled? Assurance and accountability. The board reviews and approves the BRSR board. So wherever you see a BRSR assurance report, so if you see SSA 3000 illustrative report, so there is a section called board's responsibility. So board has to prepare BRSR report, right? And board has to decide the key performance indicator. Board has to decide the subject criteria. All these are board's responsibility. Okay. So, and then the board's audit committee might sit with the assurance practitioner and decide on whatever disqualification or emphasis which assurance practitioner might have. The audit committee has to go through that. So all these practices have to be built in the board. Then you have goal setting and progress evaluation. So every year you improve, right? This year you set a target, you achieved it or not. Next year, what's your target and how you're going to achieve it? That role, that monitoring, that progress evaluation, that further decision making is also taken care by the board. Then we talk about board's composition and skills. It gets very important that you have a dynamic board, a diverse board, which knows about all these things, which has practices, practical exposure in all these ESG areas. Now you cannot expect somebody who does not know about say the impacts of a power plant on the environment, right? He might not be able to give much value on a ESG based discussion. So it is important to have a board of directors which is diverse, which has exposure, experience in all the issues, and where you can upgrade their skill set also by training sessions or awareness programs. So we look at key consideration for board composition. What makes a good board, right? For a BRSR, they should have diversity and expertise. They should have independence, and then there should be stakeholder representation. So diversity, expertise. What we mean by saying this is the individual board of directors. They should have faced multifaceted challenges. They should have seen a lot of things happening in their career span. Then they will be able to give better value addition to the board. And there should be innovation and inclusivity. I mean, they should be able to think through, if they have such good experiences, they'll be able to pick up new solutions to the challenges, right? How to address a particular challenge, and they'll be able to include all the stakeholders while addressing that challenge. Then they will be able to do a better stakeholder engagement. They should be able to do that if they have good maturity level, good understanding of the industry. They'll be able to take the confidence of the stakeholders. Future proofing. If the board is well aware of the situation, well aware of what is to be done, then they can have some foresight and they can even put some measures to tackle future challenges. The board of directors should be independent. Independence then helps in ethical decision making. We are all aware of that, right? It helps in credible reporting. So misguided reporting is not there. There is a better transparency and accountability, and long-term interest is served. So independent board is very important. I'm not saying independent director. I'm saying independent board. When you sit on the board, right, now your duty is to all the stakeholders. You might be the promoter and you might be the managing director, but your duty is to stakeholders. So you should have independence when you sit in a board, and you should be able to take a call for the stakeholders. Then you have stakeholder representation. So the board should be able to understand who the stakeholders are, and what their grievances are, and how to address those grievances, and how to take the feedback and inbuild them in the ESG parameters. So the board should also know how to mitigate risk. So when you do a stakeholder mapping, you understand what are the impacts, you understand what are the risks which are flowing in, and how to mitigate that risk. Then you talk about transparency and accountability. So when you are doing frequent stakeholder meetings, you are updating them, you are giving a better disclosure in BRSR, you are able to represent better to the stakeholder. And you are developing a very good ethical culture by maintaining transparency, by talking more to the stakeholders. You are showing that you are doing all that is required. Only when you are not doing what is required will you try not to report, right? Will you try not to be transparent? But when you are being transparent, you are doing all that is required and more than that, you will do more stakeholder representation. So this section talks about that. So we are just giving you a broad grasp at what the module is, but it is suggested that you go through it, you read it in detail. Right now, we come to specific role of the board in BRSR. So the board plays a pivotal role by providing strategic oversight, governance, and guidance to ensure organization sustainability. It aligns with the core values and business objectives. So business is business at the end of the day, right? So they have to do it for their survival. Now they have to ensure that ESG objectives, which they said, that is in alignment with their corporate objectives as well. It's not run in silos. As ultimate decision-making body, board is responsible for setting the tone at the top, establishing a corporate culture that prioritizes ethical practices, environmental stewardship, and social responsibility. So the board has to ensure that these factors, these ESG considerations, these ESG issues, they are well built into the daily culture of the company, right? They're built into the DNA of the company. The drive should come from the top itself. Only then will the middle and lower management be able to implement it. It is the board's duty to define the key parameters. So as I said, now BRSR core has introduced some KPIs. So, but there can be additional KPIs also. So board has to define what are the key parameters on which they have to work on for ESG. Right. So we'll just see what kind of activities can be done by a board. They can set strategic direction, what should be the thought process, how we should take forward these activities. They should have an oversight of the management. They should inculcate policy development. So there might be many policies, and there might be absence of many policies. Like not everybody will have anti-corruption or anti-bribery policy. So the board might take on or indulge in developing such a policy. They might check what are the best practices being followed across the industries, and they might try to replicate or try to do something better on such policies. Then you have resource allocation. The board, there is a limited resource in a company, right? And the board has to decide how to distribute those resources, or how to allocate those resources. So that decision has to be taken by the board. Monitoring and reporting. The board ensures that the company adheres to BRSR committee. So not setting the target is not the only job. They have to monitor, and they have to see how the monitoring is being reported, and how we have to plug the gaps. Risk management is a very major area. Risk assessment is very crucial now to understand the ESG issues. Stakeholder engagement. So board has to engage with a lot of stakeholders to understand how they are connected with their ESG parameter and make the ESG reporting better. The legal regulatory compliance have to be taken care of, and you have to have a long-term vision, and you should ensure communication and transparency. So ultimately, when you get a ESG report, that ESG report should be able to, if even a layman reads, he should be able to understand the impact the company is creating, good ESG impact the company is creating, and whatever true disclosures are there about the ESG of the company. So transparency is crucial. In summary, the board has a fundamental responsibility in overseeing and guiding BRSR initiatives. So the board has the responsibility of the disclosures, of the correctness of the disclosure, of the selection of the subject criteria as well. So there are some examples given of how board can do this. So board can establish a BRSR committee, like you have special committees nowadays. They can require management to provide regular updates, like MIS reporting can be built in, so that there is a 15-day update to the board. Board can ask management to develop and implement a plan to mitigate ESG risk. So we identify the risk, and management can then develop a plan and present to the board how to mitigate those risk. Board can set ESG goals, and those goals, of course, then have to be tracked whether they're being met or not. Board can encourage management to engage with stakeholders. So stakeholder engagement is a very, very crucial part. So in BRSR, when you start doing it, materiality assessment, right? Risk assessment, which is kind of connected with materiality, and stakeholder engagement. These form a very crucial aspects of how you are going to take forward the assignment. So that's very important. Then the section talks about how BRSR aligns with broader corporate governance framework. So all these things you will not find in the old module, because we have gone a step ahead and try to link the subject to its core area, right? So this is a very good revision which has taken place. So now this section talks about how BRSR aligns with broader corporate governance framework. So there are some shared pillars which are similar between BRSR and what you call as corporate governance, and there are some additional BRSR pillars also. In shared pillars, transparency and accountability is there in both. Both are for transparency and accountability. Ethical practices, both are promoting ethical practices, ethical conduct, and both aim at stakeholder protection. A good corporate governance is also for the stakeholders. Similarly, BRSR, that is also for the stakeholders. Now, what is additional in BRSR? Fairness. BRSR promotes fair treatment of all stakeholders, right? The definition of stakeholders is so huge here. Then responsibility, it emphasizes taking ownership of social and environmental impacts. So there is a specific accountability on ESG. Integrity, BRSR encourages conducting business with honesty and ethics. So there are principles of NGRBC which have to be followed. So there is a more specific emphasis on such principles. Then transparency, it necessitates accurate and transparent disclosure, right? So corporate governance, yes, it talks about mostly Companies Act per se, or from the board per se. Now in BRSR, it's very typical and very specific to TSG. Then we have a section on specialized board committees. Okay, so now since this is such a important issue, an important aspect in any board decision making, you can have a separate committee for this, and a lot of companies are doing it. So now there are some committees which might be existing, they can take up an additional role. So we can have a sustainability CSR committee, you might have seen everywhere. Now you can have a sustainability and CSR committee, or a separate sustainability committee, which can decide on what should be the ESG policy, what should be the target, how should we meet those targets, how should the risk assessment be done. That can be done by sustainability committee. Then you have audit committee. So audit committee, apart from its existing role, can also sit down with the assurance practitioner for BRSR, discuss what are the challenges, disqualifications, emphasis, and how to correct those things. Then there is risk management committee, which can take up additional role of ESG risk assessment, and then to identify what are the material risk and how to tackle them. Stakeholder engagement committee can be there to ensure that there is proper stakeholder participation and feedback is taken them from in a proper manner and mechanism, and it is then inbuilt into the ESG parameter. You have human resource and remuneration committee, which can look at the labor practices, fair wages, prevention of any discrimination, and board diversity. All these things can come. So nomination governance committee can look at your board diversity, and if the skill set as required for specific ESG activities are in the directors or not, if the proper policies are framed or not in the board, all these things can come in nomination and governance committee. So these are various committees which probably you can look at. If you read some ESG report, you will know that some companies have been doing this. Then the section is on anti-bribery and anti-corruption. So it's actually very simple, but not many companies will have it. Okay, so bribery and corruption, these things are they are going to be colossal for any ethical company. So if you allow any such activity to happen, so if you have read about fraud, there is always an incentive to do fraud, right? If there is no incentive, people will not do fraud. And if you have an anti-bribery, anti-corruption policy, you are trying to drive down the incentive and eliminate the incentive. You're able to make sure there's a maker and checker, everything gets checked by somebody else, and not one person cannot control all the activities, and you discourage all these activities very strongly. So it's important that an anti-bribery, anti-corruption policy is present. Like, people cannot come and give any gift to the employees, or anything which is like a gift in expectation of some favor in future. So some key components of such policies are: first, tone at the top. Obviously, the top management has to decide that such policy has to come in place. Then policy document. You have to have a written policy document. You can find on Google many companies already have an anti-bribery, anti-corruption policy. So you should have a written policy document. Then you should have a risk assessment. There should be a proper risk assessment done to ensure that all the ESG issues are be able to be captured and we are able to develop strategies for them. Then implementation. So you could find out some ESG issues. You could find out how to address them. Now, are they being addressed or not? So implementation, monitoring, audit, we refer to assurance here that some components of BRSR might be assured, which might increase the reliability. And then comes the training and awareness programs. So there can be comprehensive training programs for the board of directors, for even for the employees, not to take bribe, not to indulge in corruption activities. And there should be a strict disciplinary measure. So if anyone is caught doing something like this, they should be strictly punished. So all these things, transparency, communication, all these things should be there. They are key components of an anti-bribery, anti-corruption policy. Now I come to ethics and code of good corporate behavior. It helps to have a code of conduct we would have seen for employees, directors, right? So this is very similar to that. There should be a code of good corporate behavior. It shows that the company is a responsible corporate citizen. So what are the key components? First is integrity. The company should have commitment to honesty, truthfulness, etc. And there should be transparency. There should be a fair treatment of all stakeholders, all employees, customers, everybody. And the company should be socially responsible. There should be a conflict of interest management. There might be situations where directors have a conflict of interest or employees have a conflict of interest. So it is not there in every company, but now companies are coming up with it. And there's a conflict of interest policy also, which is being laid down. Anti-corruption measures should be there. Diversity, inclusion, you should have a diverse workforce, diverse board, that should be there. And environmental sustainability, there should be a dedication to, like the first point, integrity. Similarly, environmental sustainability, there should be a dedication to have an environmentally sustainable organization, right? Then what are the challenges which we see in ESG governance and reporting, right? First is standardization. Although we have now frameworks, right? But it cannot be applied in all scenarios, in all sectors, in all industries similarly. So in the initial stages, when you saw BRSR was voluntary and even the first year of mandatory reporting, companies were not able to properly understand how to report, what to report. Many companies were putting NA, not available, not quantified. All these things were coming up. So when there is a challenge on how to measure something, in fact, if a limited assurance is used when the environment is not mature, when the environment surrounding the measuring and reporting is not mature, then you use a limited assurance. Similarly, when certain aspects of BRSR, you don't have adequate guidance on how to measure them, how to report them, they then lead to difficulties and there is no standardization. One company might be reporting in one manner, others might be following something else. There's a lack of standardization, for which I believe for every factor there should be some detailed guidance. So when SEBI came out in May 2021 with a circular on BRSR, they in fact have an implementation guideline, very detailed one, right? So something like that should be there for the revised circular also. Then data quality. So ESG is all about data and then how we report them and how we show the impact. So data quality is very important, and data is not very accurate these days because again, it's not getting collected properly. Then managing priorities, you have to understand what is short-term priority, what is your long-term priority. This gets difficult because some stakeholders in the company might have some other priorities, might have some profit priorities, which will then clash with the ESG objective. Effective stakeholder engagement, right? When you're doing it for the first time for a compliance purpose, you have not done it before, it becomes difficult to map the stakeholders and then to start engaging with them. Then defining material ESG issues, what are material, what is not material. First time, it's going to be difficult. Then you start refining it. When you once freeze it, you start refining it. Risk assessment is very important, but it can be costly also. So there is also always a cost benefit analysis which is required when you undertake such a policy parameter. What is the strategic? Then this section talks about path forward for ESG governance. So we have just given a roadmap here how it can be done. So first, you establish a clear strategy which comes from the top. Then you integrate it into the business operation. So it should flow by way of policies. Then there is a stakeholder engagement and communication. You get feedbacks from stakeholders. You invest in data and technology because data is crucial for ESG reporting, and technology like artificial intelligence or Internet of Things, these things can help in better streamlining the data. Then you adopt standardized reporting framework so that you have a consistent framework to work on and to report on. Then you do a risk management and scenario analysis, that what is your material ESG issues, and then board oversight and accountability. You set accountability that this person will be accountable for ESG reporting. Then there will be employee training and engagement. You have to sensitize the employee. Then there is collaboration partnership. You have to do tie-ups with maybe an NGO or somebody working on a climate project to show the impact, good ESG impact. Then you have to continuously monitor and even adapt to better practices. Then comes a very crucial part on risk management, right? Now, risk management, it's classified into environmental risk, which can include your climate risk, biodiversity loss, water loss, all these are environmental risk. You have social and cultural risk, like, fair wages, safe working conditions, these are social risk. Governance risk, if you don't have a proper policies in place, it can lead to corruption, bribery, all these things, there are governance risk. So risk management in all these heads have to be done by a company. Now, when you do, so we have split it into like E, S, and G, how to identify and what are the challenges or maybe what are the tools. So identifying environmental risk, you may do a scenario planning, which can be a worst case basis and a best case basis, right? Which will allow you to see what are the various scenarios and how the company's ESG issues plays out in those scenarios. You can do a vulnerability assessment. This is done to identify the weaknesses in the company, which can be very bad if it comes to firefighting some situation. So we have to understand the weaknesses in the company, so we are able to strengthen it there. Then we have to do a stakeholder engagement to find out who are the stakeholder. So anybody who is affected or can affect the organization is ideally a stakeholder. So we have to do that. And value chain analysis. So ESG impact over the entire value chain of the company has to be done to understand what the potential risks are. Then some tools in environmental risk are, you can have an environmental impact assessment. You would have seen if a power plant or some cement plant is being set up. Before doing that, an environmental report is studied, and an environmental impact assessment is done, and that is then submitted to the authorities. So similarly, for any project, any product, anything, so there can be environmental impact assessment to understand what kind of resources is going to consume, what are the emissions which can come, what is the potential climate damage. All these things can be there in EIA. You also have a life cycle assessment where you identify environmental issues stemming across the life cycle of the product or service from inception till it collapses. So all throughout the life cycle, what is the environmental impact? You can do environmental risk models, so where sophisticated models are used to again do a scenario analysis to find out what can be different types of risk depending on different type of scenario. Ultimately, cost benefit analysis, whether investing in some project which is ESG negative will be good for the company or not. And even for ESG reporting, to which level should the company do ESG reporting? That also be identified in a cost benefit analysis. Then comes your social and cultural risk, which include your labor practice, like unfair labor practice, includes diversity and equity. Maybe there are no female workers, there should be equal employment opportunity. And community relations, how well are you in sync with your community in which you're working. Product safety, how safe is your product, are you putting proper disclaimers or not. Data privacy, so lot of cyber risks are increasing now. You might be holding personal data of your customers, and if that gets breached, it's a big the liability on the company then. So that's important. And then cultural sensitivity, when you do marketing, when you do branding, you have to ensure that you're not hurting any religious sentiment, any particular section of your customers. How to identify? First, stakeholder mapping. You have to first identify who are the stakeholders. Then you have to do social impact assessment. What kind of impact is my company having on these stakeholders? I have to do benchmarking. I'll have to check in my peers, in my peer industries, what is the benchmark policies and practices, and I'll try to at least match them. Data analysis has to be done to understand what is my employee demography, who are all my employees, how many skilled, unskilled, disabled employees are there. All these things have to be captured. Third party rating and report can be helpful in identifying risk, because these ratings are supposed to be unbiased and independent, and they throw out light on what exactly is lacking. Now, what are the challenges in doing this? first is data problem, right? Then weighting and prioritization. You're unable to understand which is priority, which is important, right? And then comes dynamic nature of risk. So these risks keep on changing. It's not static. It's not like once you are done, you don't have to do it for many years. No, this is a dynamic activity. You have to keep doing it. So that's a repeated exercise. Then comes your governance risk, which includes your corporate governance policies, board practices, etc. Impact on identification. So first is lack of transparency. If you don't have proper framed governance practices, you will not have transparency. Then inaccurate reporting. So if there are ineffective internal or inadequate internal controls, you might not get a proper reporting, because internal controls establish how strong your data or how accurate and reliable your data is. If that is not there, reporting will not be proper. Ineffective board oversight. So if you don't have a structured mechanism in the board and you don't have a proper vision set, you will not be able to have a proper oversight and monitoring. And there's impact on measurement, because there might be non-standardized metrics. If you don't have proper ESG measurement frameworks, everybody might understand things differently, and it will be non-standardized data. Data manipulation can be there if there is no proper data collection mechanism or verification mechanism. There can be data manipulation. There can be lack of accountability. If you don't assign somebody to be responsible for ESG, then it might lead to lack of accountability, and nobody then will be able to uh, be held responsible for any lapse. What are the examples of governance risk? One is conflict of interest. There can be situations where there's a conflict and still it's being allowed. Corruption, bribery are a big risk. And then lack of board diversity. If board is not diverse, it does not have relevant exposure and skill set, it might not be able to deal with the ESG issues. And ultimately, in the long run, it will affect the stakeholders. How to mitigate governance risk? So strengthening board oversight, you should have proper structures in place. So board oversight and accountability is there. And you should improve transparency and disclosure. We should follow robust reporting standards. Adopting ESG policies and framework. We should establish the policies, written policies, adopt them. And we have to regularly engage with the stakeholders. Now, there are some tools and frameworks for risk assessment. So we've just highlighted some of the tools. So some standards also provide how risk assessment has to be done. Like GRA provides for it, SASB provides for it. Carbon disclosure project can be followed for carbon emissions. TCFD can be followed for climate related disclosures. You have UN principles for responsible investment, PRIs. You have UN SDGs, which is there. ISO 14001 and 45001 are there for health and safety. Carbon footprint assessment tools are there, which can help you in identifying greenhouse gas emissions. A lot of ESG data providers are there who can find out benchmarks for you, best practices for you. And there are also customized ESG tools and services which are coming these days. We can't say how accurate they are working. That will only time will tell, because data is the huge crunch here, and it will take some time for the ecosystem to be developed, right? So before, when you choose a tool or framework for an organization, some factors have to be kept in mind. First, what is the size of the organization? How complex is the organization? If it's a small entity, MSME, right, you might not want anything at all. You might simply do it with what is available. But if it's a very complex, very big, large listed entity, or a very complex industry, like any manufacturing entity, you might require a specific framework to stick to, a framework which suits the needs of the organization. Then the industry, obviously, like size and complexity, the industry in which it works. If it's a very simple industry, service sector, you might not have much to do in it. But if it's a complex industry, power, cement, infrastructure, then you might require a specific customized framework. Organization's goals, what does the organization really want? That really sets the tone of what is required. Organization's budget, again, the cost benefit analysis plays here. Specific management action in ESG risk management. So we just are highlighting some key aspects of the role of management and in ESG risk management. Right. First is integration into business strategy. The ESG objective should come and form part of business strategy. They have to set ESG goals, practices, identify and assess the ESG risk, implement risk mitigation strategies, which is important. Once you identify the risk, how to mitigate those also has to be elaborated as strategies. Then stakeholder engagement, you will find this word again and again because it's so crucial. Then monitoring and reporting, you have to keep on monitoring your objectives, what you are achieving and what is to be done. Incorporating ESG into corporate culture, which is the same as building it into the DNA. Adapting to regulatory changes. With so much changes happening, it's important for the companies to adapt to them dynamically. You can't have a static mindset. What are the future trends in ESG risk management? Everybody knows AI is playing a lot, right? So there is an emphasis on data and technology. A lot of changes in technology will also be impacting how ESG reporting is being done. Growing importance of scenario analysis. So climate change is very bad, right? And so we have the latest IPCC report also. Have not been doing any good to Mother Earth. So this all will be impacting any company going forward. It impacts all individuals living on the earth. So multiple scenarios which can be there from best to worst. These can and are being used to identify what are the challenges for the company. So that's a trending area. Then shift towards industry specific ESG framework. So like SASB has given industry specific framework, right? So for power different, cement, infra different. So all these hotel industry different. Some specific industry specific frameworks are also there. And GRI like has topic standards. So these are gaining prominence. Focus on social and human capital. So a lot of focus is now being given on how you treat the society, the ecosystem around you, the people who are working with you, the customers, vendors who are linked to you. So all these things are gaining prominence. Evolution of investor role, as I said, investor philosophy is changing. So that is also has to be taken care, and that is playing a key role in the ESG risk management. So that was module 3. Now probably we can take the questions once we finish 4 and 5 also, because 4 and 5 are very small. So once we finish, we can just keep on taking the questions. Module 4 is on best practices and ESG data management and SRMM. So SRMM was developed by our institute only. You had version 1, then it was revised to version 2. So in this module, we have just tried to give some best practices which are there. So nothing can be perfect practice. We only have some developing literature, evolving literature, which we are putting it for the benefit of our participants. Many more may come, and we have to be updated with them. So we'll talk about best practices which are there, how ESG data management is done, and what is SRMM, right? So if you check out, there are currently 2 which we have referred. One is NSE, our National Stock Exchange, has released a guidance where they have conceptualized 39 sector-specific integrated guides to BRSR format. So when the BRSR came, NSE came down with this guideline for 39 sectors. So this can be a very useful guide to see what are the best practices. The New York Stock Exchange, they released ESG guidance, best practices for sustainability reporting, and they also broadly explain what should be done. So in essence, first step is to identify the right approach, what framework you want to follow, or what is the ESG approach you want to follow. You have to freeze that, and then you have to identify the stakeholders and evaluate the state of engagement. Who are my stakeholders? How much I have to engage with them? Then you have to assess the materiality of ESG issues. Then you have to establish governance. You have to establish policies towards ESG practices. Then you have to communicate the ESG reporting step. Communication is a key factor in increasing reliability and transparency. Then final step is the reporting framework and standard, how you are reporting and how you are disclosing to the stakeholders. So some broad steps have been given for this. You can read out that. This would have been covered in the sessions also, I'm sure. Then you come to, we've given some best practices from Indian companies. These are only some illustrative ones. You have to look out at 23, March 23, whatever BRSR you can find for good companies. Please have a look around them, what new things they are reporting and all. We have given some examples. So like Tata Power has a responsible supply chain management policy, and every vendor or associate has to conform to such policy. Tatas normally have a vendor code of conduct, and if they don't follow that, Tata will not do business with them. So here also Tata Power also has a similar policy. Major waste for power companies fly ash, which is directed towards construction and quarry filling. So whatever major their emission is, or major cause of harm to environment is, that is being used somewhere, right? So they are able to mitigate that effect on the environment. HDFC Asset Management has a conflict of interest policy. So this is kind of new, and more companies might be following this now going forward. Bajaj Finance Limited completed accounting and assurance of GHG emissions for financial year 21-22. Right. This is also like picking up pace. A lot of people are doing this GHA accounting and assurances. They also have an executive level ESG committee as well to look forward the issues. Then you have Coal India Limited, which is working on things like low carbon coal, biodiversity, clean technology. So some industries will have inherent risk, and you can't just make them zero, but they can always do some good things, which so that the effect of the good things are better than the bad things, like the logistics, how the coal is transported, and captive consumption. Maybe some power in the plant itself can be driven from renewable sources. All these things can help in making it net positive. For an ESG integration, again, as we said, all the three levels have to collaborate together in the management, otherwise it's not possible. Criticality of ESG data, you cannot give more thrust on this. It's very important, right? Only if you have proper data will there be a trust factor on it. I won't trust your data if you don't have a strong internal control. Okay, if the auditor qualifies your internal control system, I can't trust your internal data also. And if you have good data, I'm able to make better decision making. If I'm able to disclose data properly, that means I have strong internal controls and I have specific parameters on which I'm pulling data, and I have a system which is able to verify those data also. This then helps in a better ESG reporting and gives me a holistic overview. I'm able to look at the company. We have a 360-degree view, including the profits and the triple bottom line approach. We are able to do a better data management because of this. High risk of alternative data. So if I don't have proper data collation and verification, this can lead to inconsistent data or alternative data, which can disturb the ESG reporting, which might lead to misrepresentation, which is not good for the company. And digital technology, it's very important to inculcate them and integrate them also in the ESG practices. Rating by external agencies are gaining prominence. You have like MSCI and CRISIL is there, which are doing ESG ratings, and a lot of companies are depending on these rating for investment, right? So these are some of the effects. Now, coming to ESG related data management, it refers to process of collecting, storing, organizing, using the data related to a company's ESG performance. So that's the brief definition we have tried to give. The purpose is to measure and track ESG performance. Purpose is to improve the decision making and enhance transparency and reporting. Challenges, we've already mentioned quite a few of them. One is data fragmentation. It can come from various sources, bits and pieces. It becomes very difficult to collate and consolidate. Second is data inconsistencies. If I have a cement plant, I might have 10 factories. All the 10 factories might understand the requirement in different ways, leading to inconsistencies and false reporting, right? So I have to spread awareness among all the 10 plants to ensure that they give the data in a particular way. And data quality concerns. So if the controls are not strong, data quality might suffer. What are the benefits of data management? You have improved risk management. You are able to do a better stakeholder engagement because you have data from all the stakeholders. You have increased access to capital. You are doing good on ESG. You're able to raise funds from the market, right? Then we have mentioned about broad ESG data challenges. So first is like general challenges. Then we have environmental data challenges, then social data challenges, and then we have governance data challenges. So in general challenges, you have consolidation errors because other sources you might be receiving. Consolidation collision becomes a tough task. Incomplete data collection. So because we saw this in the initial stages when you're doing it for the first time, data is not coming properly and it is incomplete, and that results to opaque reporting. Lack of ESG awareness is a pain point. Not everybody in the plant will be aware of what is happening. You have to first train them in that. Then past reporting inaccuracies. You cannot give a false reporting of a comparative period, right? As soon as you find out, you have to correct them as well. Then on environmental data challenges, there can be recording gaps. Water consumption doesn't get recorded properly. Power consumption may not be recorded properly. And waste management issues, right? How I'm disposing of my waste, I might not have a substantiating proof for that. How fuel is getting consumed, I might not be recording. Inaccurate emission data. I might be having some logs which I'm reporting to the pollution control board, but that might not be completely accurate because these things have not been taken so seriously till date, right? In social data challenges, you have employee data ambiguities. You might not be capturing your employee data properly. Training deficiencies, you are not holding proper trainings for the employees or the workers. Then inadequate CSR data. I might be doing CSR, but I'm not identifying the target beneficiaries and what impact it had. I'm just recording for Section 135 Companies Act. I'm recording compliance, but I don't know what real impact it had. So that is inadequacy. Then health and safety reporting, incidents at factory might not be getting reported properly. On governance, you have lack of ESG framework. You don't have an accountability. There are certain absence in policies. There is no redressal mechanism. If employee has a complaint and there is no email ID to put a complaint to, it's absence of redressal mechanism. So all these are governance data challenges, right? Then you have how ESG data has to be collected and what systematic approaches we follow. We are just trying to give a broad evaluation on this. First, you have to understand the organization, right? You have to understand the industry and you have to understand what kind of ESG impact the company has in the industry. Then you have to define role, which specific point of contact are there, who will coordinate and get the data. You have to give awareness session. You have to make sure all these SPOCs have proper awareness so they can collect the information in a proper way. Then phase 2 comes on execution, where you have to do a materiality assessment. You have to find what issues are material first of all, right? And then you have to identify gaps. So there might be existing ESG framework. You have to identify what are the shortcomings on that, how to address those gaps, how to revise the framework. Then data collection and collation. So I have to ensure that I get data in a particular format and that data is collated, unified in a particular way, and that is validated also by somebody to ensure it is accurate. Phase 3 is your publication, that I have to do the reporting in a standardized way, like BRSR is there, and it should be an accessible format. So we have to do BRSR format is given by SEBI, and XBRL has to be the way for reporting to MCA. Then you have stakeholder communication, where you have to engage with the stakeholders, right? And the frequency also has to be captured. And the feedback mechanism is very important to have to ensure that you are able to understand what the issues are and how to consider them. Then we talk about materiality assessment, right? Now there are concepts like double materiality, right? That you have to check materiality from the profit angle also as the ESG angle also. So ESG materiality provides comprehensive multi-dimensional analysis of companies' impact, risk, and opportunities, involves potential impact on companies' financial condition and broader socio-environmental implication, right? So we are not defining it per se. We are just giving a broad idea of what ESG materiality is. You can, apart from this, you can read a lot on the internet about what are the growing concepts of materiality in ESG. So first here you identify what are the key risks and opportunities, and then you prioritize, what topics are material for me. Some topics might not be material for me, it might be material for some other company in some other industry. So I have to prioritize. Then I have to validate with the stakeholders. I have done a stakeholder mapping. I have to validate with the stakeholders whether these material issues are fine. Then I have to integrate these issues. I have to put targets and goals, and I have to integrate them in my decision making. Sources of BRSR data, we have given a broad summary on how to collect data for various aspects of BRSR. You can go through this. Principle wise, we have given, like for anti-bribery policy, indicators are training and awareness. What kind of training and awareness are being done for anti-bribery, anti-corruption? So company secretary department or legal department might have conflict of interest, secretarial and human resource might have. So like this, we have just tried to give some broad illustrative areas, some policies, and which department you can refer to for such policies, right? It's just principle wise and it's illustrative. Then coming on to SRMM, that's sustainability reporting maturity model. So put it in, to give a crux of it, it is a model, a tool which can be used to evaluate how good a company is in its BRSR reporting and to give marks to the company out. So it's a 300 mark model. The total is 300 marks, and there are weightage given for each principles. And using them, you can benchmark or put marks, give marks to a company and how much a company scores. And then the model is split into 4 stages. Okay, I'll just show the 4 stages. It's a formative stage where the company is just beginning to do a BRSR reporting. Then emerging stage, when they have started put in for functions and policies and they're trying to do better. Then an established stage where they are involved in compliance functions and focus on increasing the qualitative aspect, more on leadership indicators. Then finally leading by example, where they are even making better report and bringing new things, new disclosures than what is required by law. So these are the 4 stages in SRMM, right? So if we are receiving up to 25% of BRSR score, then you are in the formative stage. 25 to 50 is emerging, 50 to 75 is established, and more than 75 is you're leading by example. So SRMM version 2 is also available, but that was brought in before BRSR core came. But nonetheless, it is still an important tool to evaluate how good a company is doing, and this helps in identifying where we are lacking and how we can do better. So what are advantages? One is gap analysis. What are the gaps in our reporting? Strategic planning, how we can do better, and continuous improvement, right? We have to mitigate all the risks which are bringing our score down. So we have just given a couple of case studies on how to use SRMM. For example, so if you see this on principle 8, a business should promote inclusive growth and equitable development, right? So these are the essential indicators. This is from a company, and this is what the company has reported. Now, when I see SRMM model, right, and in principle 8, if I come, these are the factors on the leftmost side. These are the factors which are given in SRMM model, and the scaling gives the marks which I have to give based on the disclosure made by the company. Then I put the score. Okay. So social impact assessment 0. Projects for which rehabilitation is undertaken 0. Why 0? Because the company has put none or not applicable, right? So they are in point 2. If you see rehabilitation resettlement, they have not done anything. It says not applicable. So I have given 0. Then mechanism to receive and redress given. So I have given 1 mark because 1 mark is to be given for reporting, 0 for non-reporting, and they have given a mechanism here. Describe the mechanism. They have described the mechanism, right? And then coming to percentage of input material by value of input to total inputs sourced from suppliers. So if I'm sourcing from MSME, 3 marks if more than 80% is from MSME. So similarly, other criteria is given. So I'll just check what is coming here. From MSME, 17% is there. So based on that, I'll give marks here. So 2 marks for less than 50%. So I put 2 marks. So my mark is 3. Like this, I have to do for all the principles based on the reporting done by the company, and I'll arrive at a mark which will be out of 300. And then based on the table which I just showed on the formative stage and emerging stage, based on the marks, we'll establish the company's informative stage or emerging stage, and then they can look forward to do it better, right? Then moving on, we have given links to some BRSR report. This is only illustrative. You can always check out more links. It's 22nd March today. So very soon you'll be having March 24 reports also from some of the companies. Better you check the revised reports as well. Then module 5. Okay, it's quite simple. We've dealt with this in the sessions because this has been being taught in the sessions for the old batch, new batch. GRI doesn't change, SASB doesn't change. Only thing is IFRS S1, S2 draft were there and the finalized version have come, right? And now we have European standards also there, not applicable for us, but nonetheless a global development. And there are some proposed US Equity Exchange climate disclosures also. So we have given some global trends, what is happening, right? So these things you can just read on that, why globally it's picking up. These are some popular global framework: GRI, SASB, Integrated Reporting, TCFD, Carbon Disclosure Project, UNGC, and OECD, UNGC again. So all these are some global frameworks which are there. So we have just given a brief here on them. Then global emerging trends. What are the emerging trends which is happening globally? So more of community engagement is happening everywhere. It's not just India. Technology integration is happening everywhere. Circular economy. That reporting on circular economy. If I am building something or my service or even cement, if you take cement bags, if that bag is coming again being used for something, I'm creating a circular economy, right? So this is gaining popularity. A lot of people are reporting on a circular economy, and there is a push on increasing of circular economy to make sure whatever is initiated again comes back to the process, so that there is no outside impact on because of an entity. Then you have sustainable finance integration. Companies want to issue green bonds, green debts are being issued. So that is a global trend now. Supply chain transparency is a global trend. Everybody wants to understand how the supply chain and logistics is working out environmentally, what kind of things are being done to optimize the pollution which is emitted from the supply chain. Impact investing. So impact investing, in fact, is a term which started in the United Kingdom, right? And it has also gained a lot of prominence, where we identify how much impact an investing has garnered, right? So if I do a CSR project, I have to then find what my target beneficiaries benefited or not. Similarly, in impact investing, if I'm doing an investment, I have to see what impact that investment created. How good was it for the environment or the society, right? So that is picking up pace. Regenerative agriculture, where I'm able to restore the soil health, enhance the biodiversity, that is picking up space. Alignment with the SDGs, everybody wants to align with the SDGs at least. Climate risk analysis, everybody wants to do globally. And eco labels and certification, every product service has to be labeled to give customers the confidence. Then we have given broad summary of the reporting framework like GRI, which we have been talking on the session. We've given a timeline on GRI. Now you have topic standards and universal standards also, which we have just given broadly here. You have universal standards, sector standards, and topic standards, right? And GRI obviously is getting linked. So BRSR, whenever reporting there, you can see GRI mapping being done by companies. So we've just given a brief of how BRSR and GRI is mapped. Some differences we have mentioned about GRI and BRSR, like BRSR refers to financial year, but GRI refers to reporting period, which might be different than a financial year. BRSR requires current and previous, so comparative. GRI does not, it's mainly for the current period, right? And GRI standard are required only report on topics that are material. BRSR has chosen what is essential, what is leadership. So that is there. Then we talk about SASB. So SASB, in fact, has given a set of guidelines for all reporting organization. So they are also used quite frequently. They have given even sector specific like food and beverage, consumer goods, healthcare, infrastructure. So these can be referred. Then we talk about integrated reporting, which was brought in by IIRC. You would have seen a lot of reports in India are based on IIRC framework. So we're just given a brief on that. TCFD, which we keep on discussing in session. RBI has asked banks to follow TCFD on a comply or explain basis. So TCFD is there. And TCFD basically talks about risk in two categories. One is physical risk, like climate change. It leads to a physical risk, right? Tangible impacts are there. And then there's a transitional risk. If I say I will become net zero, for becoming net zero, there are certain risks, right? There are certain costs involved, energy cost, optimization cost. So transitional risks are those risks. Then ISSB, as we know, was constituted, and ISSB brought IFRS S1, S2. Final version were released in June 2023. IFRS S1 is general requirement. So these are financial reporting standard, but they are now focusing on disclosure of impact of non-financial information on the financial reporting. IFRS S2 talks about climate-related disclosure. Companies have to disclose climate-related risk and what they are doing to surpass it, right? So brief has been given on them. These are again the top standards we have just referred. Then European Union standards, this is new. And so CSRD used to exist. So even this we cover in our sessions. So CSRD used to be there. Now the European Union has come with ESRS, European Sustainability Reporting Standards, right? So timeline has been given here. So they are a set of 12 standards which cover certain ESG issues. Out of the 12, so-called first set of standards are two cross-cutting. So there are two general standards, and apart from that there are 10 specific standards. So ESRS 1 is a general requirement, RS2 is a general disclosure. Then you have 10 other specific standards like climate change, pollution, water, biodiversity, like that they have given. What are the key features of ESRS topics we have given here? Like there's a value chain impact. We want to show in ESRS what the value chain is also doing on scope 3 emissions, right? So they are going one step ahead, not the company, on the value chain also. Then there's a principle of double materiality, right? What is material has to be seen from both profit and ESG angle. And phasing of certain disclosure. So they have put a trigger point for disclosures, like companies with fewer than 750 employees may exclude data on scope 3 ESG emissions. So like that, they have put classifications and thresholds. And need for interoperability. They say this can work with IFRS S1, S2 also. So there is interoperable. US SEC had gotten some drafts disclosures like climate related disclosure and rule making. It's still in draft stage, but just for information we have given. Carbon disclosure project is very, very renowned and old. It has been taught in the sessions. Gold standard for environmental reporting. So this is referred for your GHG emissions, etc. Then Dow Jones Sustainability Index, basically an index also assesses, evaluates companies, see how the reporting is being done. So that also helps in proper assessment of it. So that's how we have tried to capture 3, 4, and 5 modules, right? So the main thing is don't stick only to the literature which is given here. We have given illustrative reports, examples. It's in your benefit as members of the institute to read more on this, to see what else is happening. And March 24 might have many new things which were not there in March 23, right? So those things also we have to be studied, and you have to be updated on this throughout. Like ESG is dynamic, your learning of ESG should also be dynamic. So I guess I've covered everything. Now I can take questions if any has been posted by the members.
Sir, we have one question only.
Okay. What is it, ma'am?
So one participant have asked, what is accountability when there is a gap in reporting frauds that is generally treated as procedural lapses? Most accountants consider any fraud which is not equal to rupees 1 crore. These are treated as minor aberrations. What is the role of CAs if management certification and declaration is obtained on these lines? And so later, if there is a fraud reported, can this be a line of defense as BRSR compliances?
It's a very long question, actually. So what I understand is some practitioners might consider a particular level for reporting fraud, and below that level, they might not report the fraud. And tomorrow, and based on management certification, if a fraud is not reported, and tomorrow something comes on the public domain, can CAs or practitioners be held accountable? Am I reading it right? I think that's the question.
Yes.
Yeah. So basically, you are giving either a reasonable assurance or limited assurance based on a lot of information which is given by the management, right? If the information disclosure itself not right, and you have taken your due diligence, and you at that point in time did not find anything fishy about the information, and based on the information provided, you have given your assurance, typically you should not be questioned. Okay. And this being a new area, there are a lot of maturity which still has to come into all these reporting and disclosures. But we never know, right? So NAFRA is opening up cases even 10 years beyond what when it was constituted. So we have to be careful that we take all substantiating evidence. And I'll say, don't look at fraud from a value point of view. A 1 rupee fraud is also a very major thing which can impact or have a cascading effect throughout the organization. And whatever is noticed, if you're not satisfied with something, you should at least put an emphasis on matter to bring attention to the management, and you should take proper management representation to furnish it.
So there was only this query. So it's really thank of you to engaging our participants with the new revised module that we have. So participants, now we'll be having a break. We will rejoin by 2. So we have a 1-hour break. Thank you all. Hi to all the participants. Again, I welcome you for the online preparatory batch for certificate course on sustainability and the BRSR examination. I will now hand over the session to our faculty, Harsha Ramnani ma'am. Ma'am, all over to you now for the module number 6, 7, 8, and 9.
Yeah, thank you so much, Indu. Just confirm me whether my voice is clear, and let me share the screen as well. Just a
Yeah,
minute.
ma'am, your voice is clear.
Okay. Screen is also visible?
Yeah, ma'am, screen is also visible.
Yeah, thank you. So now we'll start with module 6, which is materiality statement. So this particular module, talks more about materiality analysis when you start working on ESG implementation and the BRSR reporting. So how we need to consider the materiality. So this module will help to understand all of us. The key elements which we are covering here in a background material. One is about the unlocking materiality, what exactly here materiality means. So this gives us an idea about definitions. Then how we can start with discussing the same with different stakeholders. What can be the methods to conduct an effective ESG materiality assessment? So the next section will provide us insights about charting the path. Then learning how to map and present the results of materiality. Then a strategic integration, that how we can integrate the financial materiality with a impact materiality. And more about double materiality, a glance to the future, that how one can understand first of all double materiality and how we can implement the same within an organization in terms of ESG implementation as well as for BRSR reporting. So section first here describes about ESG context, materiality in the ESG context, which gives us a brief understanding about the materiality, that what we understand in terms of ESG materiality, which normally includes the environmental aspect, social impact assessment, and the strong governance pillars. Then it gives us insight about financial versus ESG materiality, how it is different from the financial materiality and what we need to take care when it comes to the ESG materiality. Then gives us idea about defining ESG materiality. So GRI definitions on materiality as a topic gives here as all of us as an insight in term for materiality analysis, how what are the material ESG issues that can be considered for reporting with which can affect the company's stakeholders, like their employees, their investors, their customers, local communities, and the environmental itself. In the next section, we have a good understanding about the importance of ESG materiality, why it is important in whatever the capacity we are working in an ESG ecosystem very specifically. So there can be a situation where we as a professional are working on ESG implementation. Then there can be a situation where we can work as a regular day-to-day activities within the ESG domain to carry it out, and then a reporting and assurance. So all aspects here are important, and accordingly, it gives us idea about the importance. Then next section give us insight about the process and the methods which are available for materiality assessment, which gives us idea about 6 simple steps, which is define purpose and scope, first of all. Then specify the potential material topic. What can be the potential material topic for the particular organization? Then identify stakeholders, who are your material or key stakeholders for the purpose of materiality application. Then collect and analyze the insights, prioritize the material topic, and integrate the same within your ESG strategy. So every section is defined here in detail and gives us insight about how we can work on these 6 steps. So you can see here that define purpose, scope, specify the potential material topic. Few examples are also given here in terms of environmental aspect, social aspect. and then the governance aspect. Then third step comes as identify stakeholders. So how we should, identify stakeholders for our materiality analysis. And then other three steps, which includes our collect and analyze insight, prioritize the material topic. So when we are prioritizing the material topic, so this is something which can help us to understand that how we should prioritize, where on one axis we should consider the business impact of the material topic, and on other axis we should consider the importance of stakeholders. Accordingly, we can decide what particular topics are very high important, then little bit lower side of importance, and a low or medium importance. The circles which you can see in this particular chart, it denoted to environmental, social, and governance. So this is how normally when we work on any particular ESG engagement, the materiality analysis should be presented to the organization so that they can understand that, okay, how we consider particular topic or particular area as a material one, and why we leaving the other particular relevant area which probably they may consider as important, but after having a material topic analysis we may consider it medium or a low level importance. Then after having a list of our material ESG related topics, we can integrate the insight into the ESG strategy. Then next section comes as a mapping and a presenting a materiality assessment. So it gives us idea about why it is important, first of all, to map the materiality with our ESG issues. Then it comes as a mapping process. So that process, again, we have given here in a 6-step simple process, that first of all, we need to identify the ESG issue, then stakeholder engagement, which includes normally to engage a diverse range of stakeholders to understand their perspective for the identified issues by the organization. Then it comes to the assess impact on the company. Whatever the material ESG topics we have identified and we have finalized after the stakeholders engagement or stakeholder discussions, how we are assessing the impacts on the company. So then third step we considered as an assessment. Fourth is plotting on the map. So that we already discussed, prioritize, address, and review and update regularly. So one small example also here given from the ITC, which can help us to understand how mapping can be done for any particular organization. Then next section comes as an integration of materiality into business strategy. So this first of all explain about what are the benefits of materiality assessment and how we should integrate the same. So this particular chart gives us idea about benefits, which includes the strategic alignment, risk management, innovation and opportunities identification, then regular stakeholders engagement and collaboration, performance tracking and the reporting, and the rest comes as a leadership and a commitment, continuous improvement, and the continuous sustainability business process. Ultimately, why this sustainability process isn't considered important by the government itself for continuous application and the regulatory environment, because we need to convert all the business processes from just only the business process to environmental or a social friendly business processes. So it's an exercise which includes complete overhauling of your all business processes wherever you are working, in whatever particular designation or a capacity you are working, because earlier processes were just only focused on the business aspect, the business purpose, but now this includes the 3 aspects which where the environmental, social, and governance, all 3 are the important one. Then we come to on double materiality. So in ESG assessment or ESG ecosystem, the concept which normally being used practically and being talked more about, it is a double materiality, where we include our financial materiality and the impact materiality together. Because ultimately, when it comes to the materiality, every organization, every regulator want to understand specifically what is the impact. And when it's come to the impact, the conversion of impact into the financial numbers, it's important, because otherwise it will be very difficult to make understand all the stakeholders why we consider particular topic as a material one. So here a little bit insight about from where it is, origin is there, what is the meaning of double materiality exactly, and why it is important for us. So like as a initially also covered by Chindu, Badri sir, and myself as well, for a very short session, that worldwide, if I talk about, GRI is the most common standard which is being used by many of the MNCs, considered being the oldest available reporting framework. So this double materiality is again, comes from the GRI 2021 standard, and also from EU latest corporate sustainability report directive. So these are the two important aspects which we need to consider to understand for the purpose of exam as well as for practical application. And then how to implement the same, and what can be the reporting standards. So here we have given just few insights from European Financial Reporting Advisory Board, which was published in 2022. And then last sections comes as a limitation, where what are the limitation you can consider for the materiality statement, because ultimately materiality is the professional judgment, and when it's come to the professional judgment, always have a inheritance limitations which we need to consider, and we need to prominently disclose whenever we are calculating or we are working on any materiality assessment task. So here a few limitation aspect which comes as a subjectivity and the biasness. Then it is, standardization is again can be one of the limitation here. Then scope and the boundary settings can be one of the limitation here. Resource intensiveness is again can be a important limitation here. So these all limitation explained here in a shorter manner, very crisp and precise, so that you can have an idea about that what can be the limitation. And it is also again just few of limitations. There can be other limitations as well which you can encounter, or maybe you can experience when practically you are working on materiality assessment. Then last section is about future trends, which is the about double materiality. So this gives us idea about that by following the double materiality concept, we can have a greater recognition and standardization in a process. Then increased transparency, which gives idea to all stakeholders about financial impact as well as the environmental and social impact of material topic. Give edge to us by using the advanced technology tools for assessment of materiality. Emphasis is on social and the governance factors. So this is again one more aspect where we can leverage that. Most emphasis, if we can see, is on the social and the governance aspect, which is somewhere a key to run a successful business. Then comes as an integration of ESG into core strategy. So now this is a very much important aspect, because now the every business discussion, every business transaction, or any type of discussion which we think about the business should always include the integration of ESG into the core strategy. Because whenever you are planning to start any new business, or if you want to suggest anything to existing business, or anything which is related to the business, now on the table with business principle, we specifically need to discuss and consider the ESG aspect as well. It is having a holistic approach and the forward-looking assessment, which gives us important to the materiality assessments. So by this, we conclude the chapter module 6, which gives you a complete insight about materiality assessment, including double materiality, which includes the financial materiality as well as the impact materiality. Then next module comes as a module 7, which is a assurance aspect in an Indian context. What I understand from my practical experience is that this is the important one module for everyone. And being a chartered accountant, we always understand as a, we always consider as a best to conduct a assurance. because of our background of having a regular experience of audits. However, in the ESG assurance or a BRSR assurance, if we practically talk about, it is only not a domain for a chartered accountants. There are, company can consider other professionals as well for their assurance engagement for ESG reports or BRSR reports. So here, this particular module give us insight, first of all, what exactly is the assurance in a ESG domain, then gives us insight about assurance for BRSR core, which is applicable in an Indian context, because in India, for there is a phase manner notification is giving us insight about that how assurance will be mandatory for listed companies. Then it gives us idea about assurance options, where a different type of assurance which are available is being discussed, including limited and the reasonable assurance approach, and understanding the respective scope and implication. It gives also insights about standards which are available for assurance purpose, which gives us to have a solid foundation for conducting a accurate assurance engagements. So the first section is 7.1, which is the definition of assurance. This particular section gives, first of all, understanding what exactly here we mean in term of assurance in an ESG context. Whatever the report name, we can call it as BRSR report disclosure, which is mandatory for top 1000 listed company. There can be other listed company who are also publishing their sustainability report, or they may be call it as a ESG report, or maybe by any other name. So name can be different, but assurance can be requested to any particular professional who is expert in a particular domain. Mandatory and a voluntary application is different. So here, why assurance is needed? So few assurance examples here have been given, that assurance always help to increase recognition, trust and credibility. It always improve the stakeholder communication. The stakeholder always have more comfort on any of reporting or a disclosure when it is being audited by someone, or assurance report has been taken on by particular professionals. It improves the accountability, enhance the quality of disclosures, and improve decision making by the stakeholders. So few examples here have been given why need of the assurance is there, and how we can always have discussion on this aspect. The next section comes as an important one, which gives us insight about voluntary and the mandatory assurance in an Indian context. So it gives us insight about the notification which was issued in July 12, 2023. Link of the circular is also given here in a module, which directed you on a original notification or circular. By reading this circular, it gives us insight about that SEBI has mandated the assurance in a phased manner for top 1000 listed company, and by 26-27 financial year, all top 1000 listed company will be covered under the assurance for BRSR report, and the assurance that companies need to take should be the reasonable assurance. So this is the mandatory application. And for reasonable assurance, SEBI also issued a BRSR core assurance framework, where few core assurance segments have been given, and there how we need to assure that what can be the mechanism, that is also listed in Annexure 1 of SEBI circular. So these KPIs need to be reported in BRSR core for their value chain partners as well. So that phase manner application is also given in this circular, where by financial year 25-26, top 250 listed company on comply and or explain basis, they need to have a limited assurance for their value chain suppliers as well. Then section 3 gives us insight about applicable standard for sustainability assurance. So a standard which is a local standard we considered in India, which is being issued by Institute of Chartered Accountants of India. So standard on sustainability assurance engagement 3000, it is available. Link of the this standard is given here in the module itself. Then there is a separate standard on the assurance engagement for greenhouse gas statement. So that can also be considered if you are issuing your report, assurance report, under the standard which is being issued by ICAI. Client can also request to assurance provider to issue assurance report on international standard. So similarly to international standards are available. One is ISAE 3000 revised edition. Link for the same is also given here. And the second one is about ISAE 3410, which is assurance engagement on greenhouse gas statement. So on a similar international standard parameters, we have also for Indian standards, which is SSAE and SAE 3410. For international standard, just to update you, there is a draft being issued in July itself, where body is considering to update this ISAE 3000 itself. But for current year, this is the only available standard on international standard regulators, and that we can use for issuing our assurance report. So it's a umbrella standard. The first one we consider 3000, where we can use this as for sustainability information, and it applies for all type of audits, for internal controls, compliances with laws and regulation. Whereas the 3410 series is a specific subject matter which gives a specific assurance on greenhouse gas emission. So this is the new draft which I was talking earlier about. So IAASB has also issued a draft new global standard, which is called as an International Standard on Sustainability Assurance 5000. This is not approved yet, so we need to wait for that once it is being approved, then accordingly we can also utilize the same for our assurance report. Then it comes to the types of assurance. So as I stated above, there are two types of assurance which we can provide. One is the reasonable assurance and other is the limited assurance. Under reasonable assurance, practitioner is assumed have reduced the engagement risk to an acceptable low level in the circumstances of the engagement as on the basis of the practitioner conclusion. And this conclusion is expressed in form of the convey opinion on the outcome of measurements and the evaluation of the underlying subject matter against the criteria. So it gives more comfort to the stakeholders, and therefore a reason it is being expected. Stakeholders mostly expect to have a reasonable assurance. The second type of assurance is a limited assurance, which can reduce the engagement risk to the level which is acceptable in the circumstances of the engagement, but the risk is the greater than for the reasonable assurance. So it's somewhere like, if I just want to explain it in a similar simpler manner, like we have limited review for a quarterly results and then year-end audit. So the same pattern here, limited assurance is a kind of limited review, whereas the reasonable assurance is the kind of our yearly audit, where we are try to reduce the engagement risk to the acceptably low level in a circumstances. Then one table here is being given which enlighten all of us in terms of the difference between reasonable and a limited assurance. So here you can see that nature of conclusion opinion is given, like here it is a form of positive assurance, whereas in limited assurance, if I talk about it specifically, nothing has come to our attention. So it is the subject matter information is material is being considered. So it's considered as a negative assurance. Materiality, so in reasonable assurance, no difference as materiality is considered for intended user. So in both type of assurance, materiality stands similar, and up to your professional judgment, what you considered as a material item to report or what you considered as a non-material item. Then it comes to the understanding of the underlying subject matters and the engagement circumstances. So here it gives more detailed insight. Whereas in a limited assurance, it is considered to the process used and prepared the subject matter information. Response to risk, so it is more extensive. Reasonable assurance, whereas the limited assurance is not as much as responsive considering the reasonable one. Now, when you are appointed as a practitioner for assurance engagement, what should be the approach? What should be the process that you can always follow? So that approaches are being defined here, where it is being considered as a three-phase manner. One is planning phase, then execution phase, and completion. In planning phase, normally we define a scope, we see the level of available evidence, then initial risk assessment, bring in the subject matter expert if it is required. And for principle 6, if I talk very specifically, many times we need an assistant from the subject matter expert who understand the greenhouse gas emission on a detailed manner. Then understanding the entity and the industry, what is the purpose and the intended user. Then what are the reporting topics which are relevant for the intended users. Determine the criteria which are suitable. Compliance with the independence requirement. So this is again one of the important aspects, because if you are an internal auditor of any company, you are not eligible to be appointed as an assurance practitioner for the ESG report or BRSR report. If you are a statutory auditor of any company, then you are eligible to be appointed as a assurance practitioner for ESG or a BRSR report itself. Then materiality, risk of material misstatement. So these are all journal planning phase parameters which we generally use for other audits as well, is considered here also important. Then it comes to the execution phase, where few sections have been given and tailored procedure have been given here, but it is not very much exclusively that you can consider for your engagement, just to give you idea that how it can be started and execution can be done. So normally, like in other audits, what we do, a walkthrough and an understanding of relevant reporting systems and the processes and controls. Designing a testing approach, control testing and a substantive testing. Then completeness and accuracy of data supported by robust and appropriate evidence trail. So validation of that completeness and accuracy, it's required. Professional judgment about appropriate violation responding the inheritance, uncertainty and sensitivity and the risk of management biasness. And the last one is the process that have been followed are function as described. So this can be considered as a broader concept for execution phase, which can be, or more tailored or more have a sections as per the requirement of a specific transaction. Then completion. So just to like other audits, we should always obtain the letter of representation from the client, which should be issued before the issue of assurance report or on the date of assurance report. Use appropriate or latest template for the assurance report. So here again, the format of your assurance report is need to be tailored by the assurance practitioner itself by considering the applicable standard adopted for the company. Then ensure procedures and the boundaries mentioned in the report which are in line with the engagement letter and undertake during the engagement period, and to perform required subsequent events which are related to the procedures. Next section come as a ethics and the independence requirement. So this gives us idea that how we need to take care about our professional ethics as well as the independence requirement. SEBI has also issued a set of FAQs which gives us idea about, and guidance about the ethical practice and the independence requirement, and that can be referred by Annexure 2. So that probably here I cannot see as a hyperlink, but we will hyperlink this section, and accordingly amended version can be provided to all the participants. Then the brief background about SSAE 3000 and ISA 3000 here given for all the participants, where if any of assurance report is being requested under the standard which is being issued by Institute of Chartered Accountant of India. So what particular things we need to take care, what can be the threats. So here, like similar threats normally we have in other audits like self-interest, self-review, advocacy, familiarity, and indemnification is considered here to be example. Then as per ISA 3000, so here it's given a guidance about that as a practitioner, we need to comply with Part A and Part B of IESBA Code of Conduct, which is related to the assurance engagement. As a practitioner, we also need to accept and continue the insurance engagement only when there is no reason for the relevant ethical requirements, including independence, will not be satisfied. So the similar manner it is being here explained here as well. And Part B is also explained here from the Code of Conduct, which includes like public practice, professional appointment, conflict of interest, second opinion, fees and other type of the remuneration, marketing, professional services, what we should take care when it comes to the gifts and hospitality, custody of the client assets, objectivity and the independence. So these are the more or less same which generally we follow in our regular audits. Then list of few matters which can be considered important when it's come to the independence. So these are the few examples under IESBA code which can be considered that this can hamper your independence issue, so that you can always refer for your engagement. And then BRSR core format, which is being issued by SEBI for mandatory application of the assurance report. So that format is here given in a annexure form. Then annexure 2 is also explained here in a itself module. So FAQs, which is being issued by SEBI on BRSR core assurance. So there are few questions which SEBI already being responded. We are also expecting a few, FAQs more on a later of March month itself for assurance engagement on ESG reports. So as and when that will be available, you can also refer for your practical experience the same as well. So here are a few questions like, does the assurance provider need to be a chartered accountant? So it is mentioned that for BRSR core, it is not necessarily to be undertaken by the chartered accountant. It is up to the board of listed entity that they will ensure the competency of assurance provider, expertise of the assurance provider, and they will decide who can be the person for to provide the assurance on BRSR report, BRSR core. Then what activities, services by the assurance provider can lead to the conflict of interest? So here they have given idea about what we need to consider as a conflict of interest for the purpose of independence. Then the next question is about activities which can be undertaken by the assurance provider for the BRSR core. So like similar we have for other audits, the same manner. It is like activities that are in nature of audit and assurance, such as third-party certification, tax audit, system audit, tax filing, etc., can be undertaken by the assurance provider for the BRSR core of the listed company and their group entities. However, these are the exclusion that we need to take care, like risk management, project management, management consulting services, investment advisory, investment banking services, design and implementation of the information system, rendering of the outsourced financial services. So it is more or less same that we normally follow in a regular financial audit. Then one FAQ, can internal auditor can be a BRSR core provider? So answer is no, because the capacity of the internal auditor is someone who is closely working with the entity. Can a statutory auditor of listed entity be appointed as an assurance provider of BRSR core? So answer is yes. Now here, what is the meaning of term group? So here it is explained that group means holding company, subsidiary, associate, joint ventures of the listed company. which entities would be considered as an associate. So here they have given the definition of associate, which is defined under Companies Act 2013. Then what assurance standard should be followed by the assurance provider for BRSR core? So it has given us clear guidance about that this circular is not mandating or recommending the use of any specific assurance standard. It is up to the company under which particular standard they are seeking report from the assurance provider. Being a chartered accountant, we can issue our report under SSAE and ISAE 3000. If any particular organization is seeking assurance on AA 1000, then a separate license requirement is there that we need to take care. Otherwise, in a capacity of chartered accountant, we can provide assurance in these two standards: the Indian standard SSAE 3000 and the international standard ISAE 3000. Module 8. Chindu, if you can confirm me if we should go ahead with all the modules first, or should we take questions first from first two modules that we discussed?
Ma'am, we can continue with the modules right now. At the last, we can take together all the questions.
Okay. So module 8 comes as a social stock exchange and a social audit standard. So this particular module is new for the previous, so for some of batches, very exactly 1 to 19, because that was not included in the old syllabus and it is a part of new syllabus. This module gives us insight and information about social stock exchange, how it is working, what are the leverages that we can have from this innovative platform for raising fund in form of the social enterprises. So this particular module gives us insight, first of all, on social stock exchange, how this concept is being introduced in India, particular time period when it is being introduced in India as a concept. Then what was the need, why the social stock exchange was introduced. So few examples are given here, like to help social organization commercialize their financing so that they can have a scale up the operation and break their dependency on the grant funding. Then difference between social and the conventional financing, set up the mechanism which can enforce all these rules. So transparency, accountability is one of the important aspect that the reason why we can see the social stock exchange act as an agent, which is a change in social sector in India, improve market access for the social enterprises, establish a minimum reporting standard which was missing for earlier for NGOs or the social enterprises who are working for a particular social cause. The concept of social audit, which is again new for all of us, that what exactly a social audit means, how we can conduct a social impact assessment, and what are the criteria and parameters that we need to take care. Then bridge the gap between social sector and the private capital and reduce the trust deficit between government, market, civil society, and citizens. Then section explain about traditional stock exchange and the social stock exchange comparison, how it is different from the traditional one. Then gives us insight about how Indian stock exchange, social stock exchange is being introduced and made live for all of us. So the SEBI notification was issued on 25th of July 2022, which amended our LODR regulation, ICDR regulation, and AIF regulations by including the framework of social stock exchange. So all these three major regulations have been amended in July 2022. Introduction of ZCZP bond was also made in July 2022 notification itself, where SCRA Act was amended. The list of instrument exactly was amended by adding ZCZP as a one type of the instrument. Then explanation about notification here you can find, and the detailed framework on the social stock exchange, which was again specified in circular of September 19, 2022. This particular circular was explaining the framework of social stock exchange, where 4 major component was explained. One is the minimum requirement to be a non-profit organization, and for the purpose of SSC in terms of regulation 292F of ICDR regulation. Then minimum initial disclosure requirement for NPOs who are raising funds through issuance of ZCZP under regulation 292K1. Then the requirement of annual disclosures by NPOs on social stock exchange, whether they have either raised the fund or they are registered on social stock exchange in terms of regulation 91C of LODR regulation, and disclosure of the annual impact report by all social enterprises who are registered or raised fund through social stock exchange under regulation 91E of LODR regulations. So few important definition listed here in the module, which gives us insight about exactly what is the meaning of social auditor. And now this term has been changed as a social impact assessor. Then what is the meaning of social audit firm? What is the meaning of for-the-profit enterprises, social enterprises, NPO? So all these definitions have been given here. Then eligibility condition to be identified as a social enterprises. So how we can consider one particular NPO or for the profit social enterprises to be identified as a social enterprises. So eligibility criteria here is being explained, where a 16 thematic areas is being listed here. That what are the 16 thematic areas? If any of the organization is working for any of particular this problem, then they are considered to be qualified as a social enterprises apart from other conditions. Then one condition also here explained that all social enterprises who are working on above activities should target underserved or less privileged population segment as for the development priorities of central or state governments. Then a third condition that your 67% of activity should be qualifying as a eligible activities, and for that formula is being given here. And then few exclusion that these are clearly excluded to be considered as a social enterprises given here. The next section explain about eligibility criteria of NPO for being registered on social stock exchange. So how one NPO can be registered on social stock exchange, criteria is being explained here. That first of all, entity should be registered in one of the act which is given here list. Then registration certificate should be valid at least for the next 12 months when they are seeking a registration on social stock exchange. They should register for at least 3 years. So minimum 3 year standing should be there. Annual spend for the past financial year must be 50 lakh and funding should be past financial year must be 10 lakhs. And this is only for past 1 year, not for average of 3 years. Then definitions about major stakeholders of social stock exchange. So that has been explained here as a trading members, NPOs, social auditors, information repositories, MII, regulators, SRO, primary stakeholders. So these are the few important definition work. There is a workbook also which is being issued by NISM portal for the social auditor examination, and that link and the workbook will also you can access from the background material. Then financing instrument for the NPO. So the modes of the fundraising funds is being explained here, where an NPO can raise fund through ZCZP or through mutual fund or by any other mode which is being specified by SEBI on time to time. And then a similar pattern for the for-the-profit organization, that how they can raise the fund. Then next section explain about the registration process on a social stock exchange. So it's a detailed one which gives you insight about the registration process, like eligibility requirement, which is already being explained on above section. Then initially qualifying area criteria, then mandatory qualification criteria, then key listing guidelines that we need to take care. Then next section gives us insight about ZCZP instrument, and now two social enterprises have already been raised fund through ZCZP instrument after the wait of 1 year. So it is actually a good one to understand through NSE and BSC portal, where you can access their offer document for ZCZP instrument and how and what particular program they considered for this instrument. So the complete procedure you can find from background material, how social enterprises can consider a public issuance of ZCZP. Then what should be the content for the fundraising document and the other conditions as per the latest available circular, because earlier this limit was the 50 lakh and 10,000 limit was different. But in background material, you will get an updated one that now minimum issue size is 50 lakhs, minimum application size is 10,000, 75% is required a minimum subscription to raise fund through issuance of ZCZP. In case of under subscription, what are the details, what are the mechanism it has been available for NPOs. Then allotment they need to maintain as per the social stock exchange requirement, and social stock exchange is free to specify any other additional norms with respect to the issue. Then few conditions about termination of listing of ZCZP, so that you can refer link of the this 203 board meeting of SEBI is also given here, so that you can access the latest update on the social stock exchange. Then social audit standard. So ICAI already issued a social audit standards, which gives us idea for all 16 thematic areas when it's come to the detailed application. So here a brief about concept of social audit standard is being given. Then key elements of the social audit standard, how you can consider the same for your social audit, where it comes to planning and conducting the audits, defining and measuring the social impact, reporting, ethical consideration. What are the benefits by for using the social audit standard? So that few benefits have been given here. Then the scope of these essays being given here, that essays will apply whenever independent social audit of the social enterprises is carried out. Social enterprises may be for the profit or NPO. This framework may also be extended to the other engagement conducted by the social auditors, such as CSR impact assessment, which is a mandate under CSR Amendment Rules 2021, or any other similar assignment under any applicable law or a framework. And this particular framework does not cover any elements of the financial audit or review which falls under the relevant financial audit or a review standard. Then compliance of social audit standard. So here compliance note is given in terms of mandatory requirement, when it is mandatory to follow, then adherence of the SAS guidelines, reporting the material departures, and the commencement of SAS compliance. And then you will get a list of social audit standard with just a very brief introduction about the standard. If you want to read or you want to understand all these standards in a detailed manner, so that is already being hosted on an ICAI platform website, where you can always access all these standards in a detailed manner. Then here in this module, we explained about the process of undertaking social audit as per social audit standard. So it starts with data collection, then desk review, inspection, the evaluation of questions, the key metrics, assessment, challenges, and the limitation. and each section is being explained in a detailed manner, so that whenever you are conducting any social audit or the social impact assessment, this gives you insight that what exactly a particular step is expecting from us as a social auditor. So each sections explained in detail, like data collection, what should be the key consideration while we are planning for data collection, what can be the source of data collection. So in social audit, there are two types of source, which is considered as a primary source and a secondary source. Whereas primary source are the external stakeholders, which normally includes in terms of having a individual interviews, the question answer sessions, the focus group discussions or interviews or observation. And the secondary source is considered the normal data, which normally we get from engagement party like social enterprises, their books of accounts, their program details, their own impact assessment exercise or analysis. Then explanation of few data collection methods, then how desk review can be done, inspection and the personal interview, evaluation of the questions. So once you have a desk review or desk work done, we need to again see the questions which we decided to have an in-depth interview and the focus group discussion. Then key metrics of the evaluation of the project and program. What are the key metrics that we need to consider? And such key metrics can be considered, maybe collected from baseline, midline and the end line assessment. And again, there can be few things or few questions that can be asked from baseline, midline or end line assessment, what exactly it is meaning and how we can work on that part. Then assessment of the evaluation criteria. So illustrative key performance indicators, you can always hear, which can be considered quantitative or qualitative evaluation criteria. Then a brief explanation about social audit framework, what exactly it means, what is the scope of social audit standards and the elements of the social audit engagement. So when it's come to the elements of the social audit engagement, it always have 5 elements very specifically. First element is about a 3-party relationship. When we talk about social audit or a social impact assessment, there are a 3-party relationship, which includes social auditor, the engagement partner, and the intended user. Normally, like similar to the financial audit, if I talk about very specifically, company appoints the statutory auditor, but statutory auditor always address the audit report to the shareholder. So in a similar pattern, here you will report your you will address your report to the stakeholders who are the intended user of the program or a project for which you have been assigned or you have been appointed as a social auditor. Then second element is that there should be a project, program or intervention which you need to cover as your engagement. Then a project monitoring framework. So in social audit, normally we follow the theory of change framework, which again is something like it's talk more about mapping out the filling in, which is being described as a missing middle. So that is the task which we do as a project monitoring framework. This includes our again activities, the 5 line items, which is input, activity, output, outcome and impact. When we apply the theory of change model, it starts with what are the activities. First of all, we need to audit what are the programs we need to audit. Once you identify the activities, you identify the programs, then we see what are the inputs which is being used by the social enterprises for that activity or a program. We identify the input. Once we identify the input and activity, then it comes to the result aspect, which start with outputs, which is always more or less in a quantitative number, that okay, if any particular organization is running an educational program, how many number of students are benefited from the program. So that number we always give in an output. Then it comes to the outcome. So as output is the quantitative in nature, whereas the outcome is in a qualitative in nature, the response will always be in a description mode, where we try to give a short-term achievements from the program, that by running a particular educational program, by educating the n number of students, what exactly we achieve in a short term. So that comes as an outcome, and impact is the long-term achievement of that program, or ultimately you can see the achieving any of SDG goal, the sustainable development goals that we normally described as an impact. Then fourth pillar is about evidence. So as we are calling it as an audit or the impact assessment, whenever the audit is there, wherever the audit is there, the evidence part will always come. So how we need to take care about the evidence aspect, how it is being expected from us to be a professional skepticism always to obtain the sufficient appropriate evidence. This has been described here. Being a chartered accountant, we can always use SA 500 audit evidence for our evidence sufficient requirement. And the last one is a written audit report, which provides a detail about findings of the assessment in terms of the impact created or any gap which is being identified. Then a format of social audit report is given here, so that you can use for the social audit purpose when you start working on the engagements. So this is how we conclude the module which is related to social stock exchange, module 8. I'll just take a break of 5 minutes and then we'll start with last module, which is module 9. Okay. Okay. I think now we can start with the last module, which is a module 9 about sustainable finance, green bonds, and a carbon trading. It is again a new module which is being added in a revised sustainability certificate program, and important one for batch 1 to 9 because it was not covered in the earlier syllabus. So key learning areas here is this about sustainable finance, what exactly it means. Then understanding about green bonds, blue bonds. There are different type of bonds which we normally consider, like orange bonds are also there. So few terminologies explained here. Then evaluation of evolution of the carbon trading mechanism, carbon credit and the offsetting, what it means carbon market. Then what is that carbon credit trading scheme 2023? So it analyze about the scheme contribution and green credit rules 2023. So when we start with this module, first this gives us insight about what is exactly a sustainable finance mean and why it is important for India, what is the need. So few aspect which is being given here, considering the net zero emission target by 2070, that environmental imperatives are required, which includes our combating the climate change, resource utilizations, and climate adaptation. Then development needs also considered here, important one, which includes inclusive growth, the social equality, equity, and the meeting SDG requirements is one of the prominent requirement. Then last is about the economic consideration, where a few things which is being considered to explain here. It's about long-term resilience, the attractive investments, and the managing climate risk. Then how the sustainable finance in India is, or taking care as a India, what are the key developments we considered? So few aspects and insight about key developments, like government is backing sustainable growth. So there are budgetary provisions for renewable energies, clean agriculture, sustainable infrastructures. So every time in a budget, we are seeing specific announcements on a sustainable growth aspect, and for the industries which comes under the renewable side or recycling industries. Then rise of green bonds. So in India now, the companies and the organizations are considering issuing green bonds on a frequent basis, which is channelizing the funds for the environmental friendly project. So there are, because the rise is actually tremendous in terms of green bonds. Earlier, where hardly any of the company were expecting or issuing any green bond instrument. Now focus is on only on these type of bonds, which is somewhere inclined towards the environmental projects. Then it's come to the stronger regulatory framework. So as we already discussed in a previous session as well, that RBI also issued a draft note on a financial ESG frameworks, regulatory framework. So central bank is setting guidelines to for the banks to manage their climate risk, promote green deposit, and ensure transparency in a green bond disclosures. So this is also under progress now. Then market embarking the sustainability. So we can see now there are many of the sustainability linked loans with a favorable interest rate of the companies meeting the green targets. Then investment beyond renewables. So green finance is now, which is important one, and flowing the clean technologies, electric vehicles, and a sustainable waste management practices. Then in next section, here we are explaining more about current sustainable finance guidelines in India. So the RBI guideline for green financing, it is being explained in a detailed manner here, that what exactly this framework and guideline is being mentioned, explaining. The source of this framework is also available here, which you can link and get a detailed understanding about the same. The SEBI requirements for issuance and listing of green debt securities. So that is explained here, where we considered here to explain about eligibility criteria, the disclosures requirement, monitoring, reporting, and independent verification. Then it comes to the future of sustainable finance in India. So what are the specific requirement we can see in a near future? Like stronger policy framework is required. Market demand is actually growing, where the environmental awareness is required. Financing innovation is also we can expect to see in a near future, where a different type of bonds we can find in the market, like green bond we already discussed, blue bond which is related to the water consumption, and then comes to the orange bond which is somewhere more talking about the gender equality. So these type of the innovations we can see in a near future. Then focus on the social impact. So sustainable finance is not just about the environmental issues, it is also about focus on the social impact investing, and which is addressing again few challenges like poverty, healthcare access, the financial inclusions. So there are impulse of the programs which are focused on the impact, social impact, and we can see in near future that they will also able to attract a good amount of investors who are interested to generate a positive social returns alongside their financial gains. This is a drastic change that we can see in the valuation market also, the valuation domain also, that now the investor is not only interested to understand about the financial gain which they are going to make by investing the money in any particular company or in any particular organization. They are also interested to know, they are also inclined for organizations or the company who are somewhere environmental friendly, focusing on the social impact and having a good governance practices, so that in the same time when they are earning a money, they are also generating a positive social returns for the social causes. Then understanding of the global trends, so the climate change intensified and other things is being considered here important, and the challenges which remains with us, that what we see in a future with a positive outlook, what are the other challenges that we need to face, which includes like standardizing first of all the ESG data, which is a current challenge which we can see. Like, yes, we have BRSR disclosures, we have BRSR reporting framework, we have social stock exchange, social audit standard, yet it is mandatory only for few set of companies which are coming under a threshold limit. For rest of the companies, for rest of the organization, it is not standardized yet. So that is something, one of the kind challenge which we need to address in a near future. Ensuring transparency in green financing practice is again one of the crucial one, and developing a capacity to assess and manage the climate risk, because for the current situation, if we talk about the ESG practitioner, the ESG people are very less who understand requirement in a detailed manner. So that type of the capacity building program or a workshops or regular certification or a course or designs is also one of the things that we need to address in a near future. Then it comes to the green bond. So green bond is explained here in a detailed manner, that what exactly it means about environmental aspect, what type of the bonds are available. So few types are explained here, like climate change bonds, renewable energy bonds, energy efficiency. So whatever the type of bonds which are somewhere addressing the environmental issues is considered here for the explanation. Then history, so how it started. Then what is the existing regulation for the green bond market in India? So the SEBI disclosure requirement for issuance of listing green debt securities in 2017 was there, and further it is being updated with the concept of blue and yellow bond in 2023. Then Indian souvenir green bond framework. Then in a similar manner, blue bond is being explained here. With an applicable regulatory framework of the sustainable finance, which is being issued by RBI and European Green Deal and a sustainable finance taxonomies. Then a very much important aspect which is being considered here to explain is about the evolution of the carbon trading. So how it started in 1997, then Doha Amendment 2012, Paris Agreement, which is now widely being used by many of the countries, 2015. Then COP26 Glasgow, which was the milestone for many of the countries, where they considered of many targets of 2030 to obtain. India also has taken a pledge of life in the 26 COP Glasgow. And then 27 COP Egypt, where more talks about move from planning to implementation and launch of the African carbon markets initiatives. Then detailed explanation about carbon credit and carbon offsetting, how normally it works. So what is the meaning of, first of all, carbon credit? Then what is the carbon offset generally we consider here? What are the parameters that we consider here in terms of carbon credit and the carbon offsetting? Difference is being explained here. Then carbon market, which is actually being requirement for the current scenario, where companies, organizations are not much aware about the requirements, the availability of the market, and how they can, use that to gain a certain amount. And on a same side, they can also, meet the positive impact on an environmental aspect. So here it explaining about the carbon market, that two type of the markets are here. One is the compliance market, which is created as a result of any national or a regional policy or regulatory requirement. And other one is the voluntary carbon market, which refers to the issuance, buying, selling of the carbon credit on a voluntary basis. Then recently India also issued one carbon credit trading scheme 2023, which was notified on 28th of June 2023. So this particular section is explaining more about this carbon credit trading scheme. What exactly is this scheme, and who are the key stakeholders under ICM, like the Bureau of Energy Efficiency, the Grid Controller of India Limited, and the CERC, which is the Central Electricity Regulatory Commission. Then what are the key compliances which are required under CCTS 2023? So the key compliances are explained here. And just on a conclude this note, then Green Credit Rules 2023, it was also issued or notified on October 12, 2023, which represents a significant commitment by India for sustainable practices. Officially, it was announced by the Ministry of Environmental, Forest and the Climate Change. And then detailed about these credit rules is been explained in this sections with key objective of these rules. What are the key objectives? Why these being issued? Then what is the framework that we need to follow under Green Credit Rules 2023? What is the eligibility criteria for green credit? So these are categorized here, the key areas, the activities which are eligible for green credits are explained here. And the additional sources which is being, reference has been used. So this is how we conclude our module. Now I think we can take questions from the participant.
Yes, ma'am. There is one question which is asked about, like, can ICI members prepare their assurance report as per ISAE 3000 revised standard?
Yes, being a ICI member, we are eligible to prepare report under international standard because our ICI body is ICI has an affiliation with IFAC. So that is the reason we are eligible to prepare and issue report under international standard as well.
The next question is, what is the registration requirement of ICI members to issue assurance report as per AA 1000 AS?
So for that, one need to visit a AA 1000 website, and that website is giving a eligibility criteria. First, we need to see our whether we are qualified to be registered as a, to be a license holder for that certification. If you are having a sufficient support from your educational background for the same, you can just go with the process. Otherwise, that educational program we need to, have, and after that only you will be able to get a license from AA 1000.
Ma'am, the next question is special certification required for ICI members to conduct the social audit?
For social audit, one need to be clear, first of all, the social audit exam, which is posted on a NISM portal. And being an ICAI member, you are eligible to be appear in the exam with for the social audit. So just you need to register for the exam, clear the exam. Once you clear the social audit exam, then you can take a membership with ISAI SRO, which is Institute of Social Auditor of India. And after having that membership, you will be eligible to conduct a social audit. So it's a separate certification. It's a separate certification requirement, and for that, a member need to clear the exam first.
And this is the last question. They're asking like assurance requirement with related to the BRSR core.
Exactly what means an Can you repeat the question again?
Yeah, they are asking like which assurance is being required for the BRSR core.
For BRSR core, reasonable assurance, SEBI has issued directions. So for this year, financial year 23-24, top 150 companies are mandatorily need to have reasonable assurance on their BRSR core. Next year, it will be extended to 250 companies, then 500, and then 1000. So if I talk about for current year, for 150 top companies, reasonable assurance is mandatory. Rest of the company can opt in for the limited assurance if they want.
Thank you so much, ma'am, for the today's session. I really thank for enlightening our participants with the revised module of our background material. Now, some participants have asked for the sample papers and the case studies. So we exactly don't have the sample papers, but we'll be sharing with you some of the sample questions and as well as sample case studies for your reference. Also, by the evening, we will upload the revised background material on our SRSB page of ICI as well. And we have already emailed to you the revised background material. So I feel everybody is now aware about the revised background material, and all the best for your examination.
Very best of luck to all the participants for your exams. And thank you so much, SRSB and all the team members for this preparatory sessions. Thank you. Thank you, everyone.
Thank you so much, ma'am.
Thank you. Should we wait for 4 to 5 minutes more for any query, or can we log out?
Ma'am, we can log out.
Okay. Thank you.